onto Israeli territory. So far, that confrontation has remained contained and at a low level, but just by doing these low-level operations, let's say, Lebanon front is actually keeping a part of the Israeli military pinned down in the north, and so in a way providing assistance to their brothers in arms in Hamas in Gaza.
Reem, when we talk about this kind of piecemeal approach almost to gaining territory, I mean, this has been an approach that's been in play since going back to the 1940s. What is the end game here as you see it?
So what we're hearing from the Israeli authorities, what they've declared very publicly, is that they want to deal a blow to Hamas that will basically decapitate the Hamas leadership and get rid of Hamas over the very long run. That's quite a very big goal and a very ambitious goal to set. They are preparing for a very long ground offensive, as it seems, and they have been telling their own population that it's going to take some time and that it's going to be very bloody. And of course, on the Palestinian side in Gaza, we're already seeing quite a lot of devastation and the casualty count mounting as the Gaza population is unable to move or seek refuge, given that even the border crossing with Egypt is closed.
Talk to us a little bit then about this ground offensive. When we're talking about the hostage situation specifically, how does this all play out when we know that Hamas has a history of trading even just one hostage or even trading 1,000 hostages, for example, for just one hostage on the Israeli side? How does this play out?
So the number of hostages that Hamas and Palestinian Islamic Jihad were able to take is unprecedented and has added an unprecedented dimension to this conflict. When Israel has had to fight Hamas in previous times, it never had more than 100 civilians captive with Hamas. That is definitely factoring into the Israeli preparations. We're seeing them take time, figuring out what to do, how to do it. But they're also, it seems, preparing their own people for loss of life among the hostages, as it seems inevitable.
Talk to us a little bit about who the game changer is here. We're hearing this from so many different perspectives. The Saudis, they were pulling back from those efforts to normalize relations with Israel. Iran being accused of being behind the funding for the multiple reports suggesting that. And even Turkey, now the president there, President Erdogan, chiming in about the U.S. military aid. Who is the game changer of those three? Iran, Turkey, or Saudi Arabia?
I think that's a very complex question. I don't think any one of them is a game changer at this stage. The U.S. involvement is obviously going to depend on what the Israeli leadership ends up deciding to do, how ambitious it wants to be, and what kind of support it is going to request from the U.S. Iran already is in the best position of the three, given that Hamas, which is close to Iran, has dealt a game-changing blow to Israel. And if I had to, appoint one game changer, it would be the Hamas attack against Israel. It was sophisticated in a way we have never seen. It inflicted civilian casualties among Israelis on Israel's territory within the 1967 borders in a way we have never seen before. That was the real game changer here.
Talk to us then, finally, in terms of the U.S. military approach. We kind of expected this rhetoric from President Biden, even from his predecessors as well. Do you see this being the conflict that suddenly brings in the rest of the West?
That's certainly one of the risks here. Of course, the U.S. has immediately dispatched its biggest carrier strike group into the Mediterranean. It has arrived now. As Secretary of Defense Lloyd Austin said, it is a measure of deterrence, so it was sent to deter Hezbollah from entering the fray, to deter the Syrian border, the Syrian front from also being opened, and of course to deter Iran from further expanding this conflict. And only time will tell whether that deterrent will be effective. The U.S. In the past, in recent years, has not actually been effective at deterring Iran and its network of influence in the region. We saw that, for example, with Iranian attacks on Saudi oil facilities and the lack of U.S. response. We also saw that, if you want to go all the way back to 2013, with President Obama not honoring and not enforcing his red line. And what we're seeing today, this level of Iranian challenge, and in addition to all of its partners in the region, was definitely emboldened by that red line that wasn't enforced way back then.
I mean, it's such a complicated issue, as you point out, with no clear solution, as shown by 80 years of conflict in the region. Greenwald talks, we have to leave it there, but thank you so much for joining us. She joins us from the International Institute for Strategic Studies. We thank you for your analysis, as always. More markets analysis ahead. Stick with us. This is Bloomberg.
Morning. Yeah, Greenwald, yeah. No, I was on the weekend and I came tomorrow day after. Ah, shit. What I'm doing? So, just looking at the place.
Changes everything. I think it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in economy, it's sort of stagflation fears moment. People were talking about that all day yesterday.
In London. We are getting some breaking news here. The Australian journalist Chang Lei has been released from detention in China. This comes after she was, I believe, held in China since in 2020 on espionage charges. You have seen Prime Minister Anthony Albanese speak about this on Wednesday, or on today, saying that this could actually be an end to a very difficult few years for Chang and her family. So, of course, we'll keep you apprised of that. Albanese said that he had met with a former detainee over in Melbourne, and that she has been reunited with her two children. Crucial as we talk about the thawing of kind of tough relations between Australia and China. We will keep you apprised of all those headlines as we just said. In the meantime, as we march to the European market open, let me bring you some charts that you need to know to get your trading day started. A lot of that centering around the bond volatility. We'll hear about getting a lot of different Fed speeds from the various players over in the United States.
Yeah, no, I don't know when this shit will change. It's like always. You're looking for something to change and there is nothing always. He's okay. He's okay. He compared to what was for the last few years. Yeah, but quite funny. Yeah, I hope so. I'll just sort out some shit today. It's getting a little bit ridiculous. not the way which I will be enjoying it.
That was the chart you take away today. You talk about the ripple effect throughout the
And
rest
I need to find a way as well how to deal about this. But we'll see. Okay. Take care, bye.
I do think what we are going to find is that outside of very few industries and sectors, governments are not going to be willing to subsidize indefinitely production that brings it home or brings it to allies. And so the benefits of international supply chains that we've seen over 40 years, from economies of scale, from specialization, from innovation, they're like, those aren't going to go away. And so if you don't have an international supply chain, you will be beat out by competitors who do.
So I think what we're looking to do is to maintain a trade policy which is based on openness, which is based on sustainability, which is assertive where we need to be assertive and defend our rights, but certainly not one which is going to closing down unnecessarily our trade and investment relationships with the rest of the world.
Globalization, that global supply chain is really important for the life science industry, particularly pharmaceutical supply chain. Think about the stress the pharmaceutical supply chain has been under since COVID-19, the war in Ukraine, not to mention the geopolitical tensions, if you will. We don't have the luxury of saying we can temporarily stock out on our product because these products, these medicines keep people alive.
This is Bloomberg Markets today. I'm Anna Edwards, live in London with Tom McKenzie.
The cash trade is just less than an hour away. Here are your top headlines. The US speeds up military assistance to Israel. Turkish President Erdogan criticizes Biden for sending warships to the region. Elsewhere, Treasury yields dropped by some of the biggest margins this year on hopes the Fed could be done raising interest rates. Shares in Asia rally for a fifth day. Plus, LHC sales growth softening in the third quarter. More evidence the post-pandemic luxury boom is waning.
Okay, lots to talk about this morning then, from the geopolitics, of course, from violence in the Middle East ongoing. Of course, we get an update on that front. But in terms of the market story, fast focusing increasingly on what the Fed is doing and what the Fed might not do when it comes to levels on, that's guiding market sentiment, along with expectations now, it seems, of further stimulus from China.
Yeah, those two factors seem to be coming to play when it comes to these markets. In terms of the reported stimulus coming through from China, hasn't been confirmed yet, but again, it could be consequential, around $140 billion US dollars, potentially is what being reported by a team on the ground, of course, in China. And then this growing consensus, it seems, if not consensus, then the increasing number of voices coming through from Fed officials suggesting that maybe they are getting closer to pause territory, given the run-up in yields that we've seen. Certainly the markets are now starting to price in far fewer hikes, if any, by the end of this year, additional hikes from the Federal Reserve. The expectations around the next meeting have fallen off significantly in terms of the expectations of whether or not a further hike will come through. Futures in Europe, though, after a very solid day yesterday, pointing lower by about 0.6% so far as we lead up to the Wednesday open. FTSE 100 futures pointing lower by about 20 points. DAX futures off by about 45 points, looking at 15,490. For further estimates and a bit more colour in terms of where the Fed may go, of course, we do have the Fed minutes out later today. Let's switch it over and see how the futures are shaping up for the US again. Pretty decent session in the United States, and the context as well when you look at Asia, again in the headlines, very straight day of gains for Asian equities. But back to the US then, futures for the S&P are flat right now. Asset futures looking to add about 15 points. Dow Jones futures looking flat as well, just off by about 10% to flat. We're looking again for those Fed minutes later today, and then the CPI could, how consequential will that be, or is the focus less on inflation now and more on what happens in terms of the trajectory of that yield curve? But again, CPI and the inflation print out tomorrow. Fed minutes out later today.
Yeah, and PPI today as well on the inflation side of things. Tom, let's have a look at the GMM there. We've been through the futures story. Things have been fairly mixed and flat in the US, but that's far from what we saw yesterday. But there was strength coming through yesterday, particularly in European markets, but also over in the United States. Gains of more than 2% on some of Europe's markets, so that's no surprise. We expect a little pullback today. We're seeing some of that positivity through the Asia session, lifted by those dual forces, the changing conversation around the Fed and the shifting expectations, the heightened expectations around Chinese stimulus. That's what we see boosting equity markets through the Asia session. It's kind of a mixed picture when it comes to FX, with the Aussie dollar just on the back foot a little, the South Korean won up 0.7%, and more broadly the dollar is pretty flat. The dollar index, the Bloomberg dollar index, and the other both flat this morning. In terms of sovereign bonds, we're still watching adjustments in yields around the Fed story and around the violence in the Middle East. So that is causing money to go into the perceived safety of bonds, or it has been doing, and now we're seeing some adjustments around that story. So we see US 2-year yields going higher as we see selling at the shorter end of the curve, but actually things are fairly mixed. The 30-year looks in contrast to be showing a lower yield story, so a little bit of divergence across the treasury curves to what we are seeing there. On commodities, a more mixed picture than we've seen of late perhaps. Brent's just up a 10% at 87.78. Let's talk to Eddie Van Dutch, who joins us from the Markets 19, who can talk to us about the markets in 3 minutes. Eddie, very nice to have you with us. Let's concentrate first on the dovish messaging from the Fed. It seems to be coming through again. We haven't necessarily heard from the hawks on this one, which will be more consequential perhaps for the markets. But we've done, I know the Markets 19 have done their own analysis on what it is that rising rates do to financial conditions, which is at the heart of the Fed's narrative at the moment.
Yeah, absolutely. Look, I think you're right, and I do expect a little bit of a hawkish pushback. But the doves, and what is interesting is that we are seeing slightly dovish tilt from everybody, right? Mary Daly, latest to come out and saying that, perhaps Jefferson and Logan was right by saying that higher longer end yields tighten financial conditions such that the Fed might not have to hike as much, in the short term. Neil Kashkari is disagreed and so on, but everyone has looked at these numbers, and we've seen that, you're not necessarily, when you see bear steepening, you're not necessarily seeing inflation coming down very much, even with a year's lag, right? So there is some question marks. This is somewhat unorthodox. And what's perhaps more interesting, though, is that Daly said that the neutral rate may now be higher. So she's expecting to stay at these levels, right? She's not expecting there to be a lot more hikes, but she's expecting to see rates stay significantly higher for longer. So I think what they're talking about is a Fed that is done hiking for now and no immediate need to cut. That probably means for the yield curve a little bit of bull and bear steepening together initially, and then from there on out just more bear steepening.
Yeah, she was talking about a neutral rate of between 2.5%, maybe 3% longer term then from the Fed. And you flagged this, you touched on what Kashkari had to say, and a bit of pushback coming through, because he suggested that maybe this is about the markets pricing in expectations around where we go next, and maybe we have to fulfill those expectations to continue to maintain yields at this level, to do the work that we are hoping it will do in terms of squeezing prices across the board and keeping that inflation on the right trajectory. What do you read into that tension?
Yeah, absolutely. Look, I think if we don't, if they suddenly don't deliver on that, then you don't need to see high, long-range yields quite as high as they are right now. I mean, you're going to see the back end of the curve coming off as well, and the tightening that they're talking about that's coming through the other long end then disappears. So it's a balancing act. If they want to see this, fulfilled, they need to keep the narrative at least such that the rates will stay high, and therefore, they can't do too much at the short end.
Okay, Eddie, briefly, the worst over the chips on Samsung?
I hope so, because that is a bellwether, right? If chips look better, then that's definitely good for the rest of the world economy. Samsung, not as bad as people had expected.
Okay, we'll certainly keep an eye on that. And the inflation data coming out of the US later today and tomorrow. Thanks to Eddie for the update. Remember, you can get up-to-date analysis and insight from Eddie and the rest of the markets via Team NLIB Go. That is the function to use for the September. Coming up on this breakdown, we're live with the IMF annual meetings in Marrakesh with the Moroccan finance minister joining us. That's at 7:20 a.m. London time. Stay with us for that conversation. Plus, the new post-pandemic luxury boom. Is it starting to cool? We will discuss after LVMH reported sales growth that softened in the third quarter. If you have any questions for our guests, we'll get a guest from the luxury space later in the program. IB plus TV Go is the function to use on the Bloomberg terminal. We'll bring you the latest from the Markets Today blog as well. If you want to check out that blog, go to the Bloomberg UK website, click through to the blog page from there, or you can type TLIB Go on the Bloomberg terminal. This is Bloomberg.
challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. There's a problems that come to me and asking your leadership team for resolving tend to be highly complex in medicine. So your ability to solve those complex problems is an important element in terms of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind and open enough mind to be able to create out the corners. What am I missing? The why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities to really think, thinking creatively about opportunities and problems. It's really important.
What about the industry generally? Do they have good challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible and we have an obligation to find the latest and best technology that we can for our customers and deliver them in the most cost-effective manner. And I think that that's a challenge and an opportunity for all of this country.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends, we're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
Consumers will expect to start big. Inflation has come down quite a bit, so labor market is remaining strong. maybe we can get inflation all the way back down and avoid a deep recession. That's what I would call a soft landing. So far, it's looking more favorable.
I think that our policy rate is at a sufficiently restrictive position to get inflation down to 3%. I actually don't think we need to increase rates anymore.
If the markets in the case recently, bond yields are tightened, meaning financial conditions are tightened, that's an indicator financial conditions broadly are tightened, it's more expensive to get a loan, then, well, if that's tight, maybe the Fed doesn't need to do as much. That's why I said, depending on whether it unravels or whether the momentum in the economy changes, that could be equivalent to another rate hike.
Okay, that was the Fed's Mary Daly, Raphael Bostic and Neil Kashkari speaking about the rate path ahead. Joining us now is Tatiana Berg-Castro, co-head of public markets at Muzinich and Co. Tatiana, thanks so much for coming to the studio this morning. Is this a Fed that is now on hold? Is it done? Are you convinced that this is a Fed that is now done? Listening to those comments.
Well, to me, it is a Fed where finally the market is listening again to what the Fed is actually saying. And I think what we've seen is that for the longest time, the Fed is saying, there's more to come, this is soft landing. And what did the market say? The market said, but look at the yield curve. The yield curve is inverted. Therefore, the Fed is wrong. The yield curve is always right. We are in a recession, or we are going into a recession because the yield curve is inverted. Now, what I remember I said for probably the last 12 months, I said, well, if everybody is looking at an indicator and to use this indicator as a forecasting tool, that indicator is losing its forecasting ability. And the yield curve was that tool. Everybody used it as a forecasting tool. That's why it inverted, and that's why it lost its predictive power.
So we have been looking for it to predict, Tatiana, given the role of the Fed in bond markets, given the role of central banks globally, has the power of that.
No, I think we shouldn't have. Exactly, we shouldn't have.
Yeah.
That is the outcome of fundamentals. Then the yield curve is inverting because the recession is coming. But it's not. It doesn't have a predictive power in itself. So the causality was the wrong way around, right? We were saying, this is strong predictive power, and therefore everybody followed the narrative, and then therefore the yield curve, because the trading happened that way, the market was positioned that way. So the recession had already been predicted without the fundamentals suggesting that there is a recession. And so this is unraveling now. So slowly we're realizing, well, actually the economic data is much stronger than this. And where would it go? I mean, it was already extremely inverted, more so than ever. So where would it further go? So then if it doesn't rally, why would you own duration? So this is what we are seeing now. And then and then the other thing that we've been discussing since the summer, really, since about May, and we said, okay, if we know that an inverted yield curve is an anomaly, and we don't believe that this is how it always should be, and it should be downward sloping, then we know when we go from inverted to downward sloping, right, it's like a seesaw, it will be flat at some point. And then we ask ourselves the question, if we know it has to be flat at some point, at what point does it flatten? Does it flatten at the 10-year, which at the time was at 3.5%, expected to go to 3%? Or will it flatten at the 2-year? Or will it even flatten at the 3 months? Right?
Where do we land on this now?
Well, we can see it is flattening at the 2-year.
So it's flattening the 2-year.
Yes.
And is that a thing that you continue to, you expect to continue? And what does it tell you about where you advise clients to position along the curve?
Yeah. So at the moment we're advising clients that while we are transitioning from this extremely inverted yield curve to a normalized yield curve, clearly you don't want to own duration, you want to be very short dated. It will flatten either around the 3 months, then it has even more to go, it would have even another 0.5% to go, or the 2-year, then it has about 20 basis points to go. And from the latest comments, it could even go at the 3 months, so there could be some pain still ahead of us. There will be events that are unpredictable, and then, sort of it runs a little bit, but there's a large trend when you look at what's going on in the shift that we have from the current economic system to what I sense more and more, a new economic system that shift actually will require a lot of investments, but also a lot of destruction.
Tatiana, what's the role of fiscal policy at the moment? A lot of our conversations that talk about where the US economy goes or European economies go end up talking about where we are on that fiscal impulse.
Yeah.
And I ask this also in relation to debt markets, because I saw yesterday Fitch put out some research. They downgraded the US, of course, in August, the sovereign debt. And now, if you look at the whole pot of sovereign debt, the percentage of that sovereign debt that is junk is now bigger than that which is AAA. And this is a sort of rare occurrence, I suppose. And I think maybe tells us something very interesting about the amount of debt that is out there and the fears for the future as to whether it can be paid back. How does the fiscal impulse in that play out against each other?
Yeah, I mean, that is another very important dynamic where, I think we still live with the sense of austerity from the global financial crisis, like the reaction was austerity, but clearly since COVID, we have gone completely the other way, and that is still going through the fiscal system. Remember, ECB used to say, well, we are negative rates, we do everything we can to cement the economy, but you, on the fiscal side, you do nothing, right? It's now the other way around. Central banks are trying to slow things down, but the fiscal stimulus continues. And so there is that, so that we have QT, we have fiscal stimulus, we have higher cost of debt, so there is more borrowing just to pay the higher debt burden. And at the other side, so foreigners, especially when it comes to US debt, when you see the largest foreigners, which is China and Japan, their dynamic of buying treasuries, there's a reduced demand, and so you have more supply, less demand, QT, and all those things can't be underestimated.
Tatiana, back in the argument with these are Fed officials who will be hearing, who are getting anxious. They're anxious about the effects of high rates. They're anxious about the run-up in yields. They're anxious about quantitative tightening and all the political risks domestically in the US and the geopolitics as well. Something's going to break. That's the fear. Something's going to break. What is most at risk of breaking in this environment?
I mean, at the moment, and I think this is what also the Fed speakers are saying, right? The reason why they're more and more confident that there is no more rate rise by then is because the whole curve is going up. So they don't need to do more to pull everything up. And so, yes, of course, at some point, bringing it back just to wanting to own duration, at some point we will want to own duration.
Is credit the big risk now versus concern about price inflation? Is the focus shifted to the concerns and risks around the credit?
So we would definitely say don't, because a lot of people missed out on owning credit this year, and they now feel, oh my God, I miss, this fear of missing out, right? So we need to own more credit because clearly it's doing really well. We see the best returns and the easiest return are behind us. Don't reach down to single Bs and triple Cs because those will be the ones that struggle to refinance at higher rates.
Tatiana, thanks so much for your time. Tatiana Castro, co-head of public markets at Research and Co. Now, the IMF says Africa's economic activity will likely slow again this year amidst taxing headwinds, but is expected to recover in 2024. This week, central bankers, ministers of finance and business leaders are in Morocco at the IMF and World Bank annual meetings to discuss issues of global concern, including poverty eradication and economic development. Let's find out what is being discussed as we get some insights from on the ground. Bloomberg's Francine Lacroix, who is at the IMF event in Morocco. Francine.
Like to be joined by the Moroccan finance minister, of course, Mr. Alawi, joining us to get us really started on this IMF World Bank meeting. Minister, thank you so much for joining us, and thank you also to playing host to this. The last couple of days have been extremely difficult for the international community because of the loss of life in Gaza and Israel. How does this change geopolitically the world economy? First, I welcome the office to the big ceremony calling for the most peaceful world and His Majesty's calling for anything that's conflict today. Of course, once again, this tragedy will probably hit the economy, especially the prices of energy and cotton prices. As of Morocco, we are watching carefully this and prepared and maybe to be able to adjust our action plans, but we don't see overnight direct impact on our cooperation for growth and macroeconomic and domestic trade. Do you worry that actually if this escalates, it again puts central banks in a very difficult position? Of course, yes, it's definitely a risk, and definitely we will be reading from them all gathering in markets this week, and hopefully they will be wisely managing the situation. Minister, what does it mean for there's also normalization, of course, of ties trade-wise between, thanks to the Abraham Accord between Morocco and Israel? Will there be conditions actually that you will be putting for this to go forward? Look, Morocco has in its DNA openness to all the world, and Abraham Accords is one of them, and we are definitely committed to be open to the world and to trade, to work with all the parties in a very, very constructive way. Is there danger as a minister that actually investors, Morocco is going through a little bit of a boost, right, with the investor community being quite confident that you're on the right trajectory so far, but do you worry that again, the Middle East becomes, because it becomes a bit of a hotbed, investors will be very shy just to come back in. So we are really optimistic about a relationship with investors. We raised some money this year with the sovereign bond, and I think that Morocco is a really reliable partner. The reform agenda is implemented in discipline and in a really proper framework. And we think that investors know this, knows that the role of Morocco in the growth of Africa is very important, and we are keeping a strong relationship, explaining what we are doing, and giving all the assurance that we can, I would say, get this money and then make it profitable for the investors. So, Minister, what are you looking at specifically to actually, I guess, give yourself the best chance to go back to investment grade? We discussed with the rating agency, telling them that our fundamentals today are much better than the moment we had the investment grade. There was some precedent conditions like exiting the gap-free list and going getting the flexibility line from the IMF. So we have an ongoing conversation saying that we definitely are ready to get back on the investment grade. And parts of Morocco were of course also devastated because of the earthquake, so you have very strong short to medium term financing needs. Again, what's the right mix of making sure that the longer term we're still in the confidence? So this after this really tragedy of the earthquake, the idea is to bring it back better. So we have a comprehensive plan for 5 years. And it's 6 provinces that are in this plan. So a large part of the funding for this plan is within the budget of the state, because we have, I would say, money available for this. Of course, we have to do some arbitrage in the department, saying this will go first to these provinces, and the sequence will be probably changed. And in the course of the 5 years, we will, I would say, look for funding for the gap that is needed, but we have time and we have the money for the first action plan, and we are in discussion with all partner international cooperation to fill the gap. Morocco also has 2 trade agreements with the US, the EU, and Turkey. What kind of relationship do you have with China? What do you think? Where do you think they're going back in 100 years? We have a relationship with China, but now we are discussing much more actually areas around the electric battery, etc. So I think that there is a room for I would say stronger partnership, but in a global way, because Morocco has definitely made the choice, as you mentioned, to be integrated in the value chain. And we have a lot of capabilities, and we have, I would say, very good geographical location that I would say can be really an asset in this relationship. So, Minister, thanks so much for joining us. As always, we're happy to rest of the IMF World Bank meetings. Of course, we'll have plenty more from Marrakesh here in Morocco throughout the day.
Thank you, Liz. Fancy that, of course, on the ground in Marrakesh. Thank you, Francine. A line crossing now from the UK and the relatively newly appointed Defence Secretary, Grant Shapps of the UK, saying that Israel should deal with Hamas once and for all. Of course, Hamas is designated a terrorist organisation by the UK, the EU, and the US, and the UK has been out front in giving unequivocal support to Israel, and reiterating that today by the Defence Secretary here in the UK. Coming up, President more military support for Israel, while Turkey's Erdogan warns of a massacre in Gaza. Prospects for peace in the region continue to dim. We bring you the latest. This is Report.
Is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here, and when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What do you learn with the dynamic move of the interest rates? Do you go fixed structure or floating structure? Not much more like what they do in Europe.
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways that we provided ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Judy Sawyer took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of that built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective is something that's very natural to each discipline.
From the pickleball courts of Arizona
To the body tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Welcome back to Markets Today. A little under 30 minutes. Got the cash equity sector.
Let's get to your top stories this morning. The US speeds up military assistance to Israel. Turkish President Erdogan criticizes Biden for sending warships to the region. Elsewhere, Treasury yields drop by some of the biggest margins this year on hopes the Fed could be done raising interest rates. Shares in Asia rally for a 5th day. Plus, LVMH sees sales growth softening in the 3rd quarter. More evidence the post-pandemic luxury boom is waning. Tom, let's look even on the futures pictures. I mentioned what's happening there in Asia, driven really by that lower yield environment over in the United States. But that conversation keeps on moving. And of course, European stocks aimed a lot on that theme in yesterday's session. So where do we go on futures?
It seems like giving it a bit of a pause for breath when it comes to the run-up we've seen in European equities, at least over the last 24 hours or so. A very solid session put in by European stocks yesterday, led by travelling election, which posted gains of around 4%. Basic resources also did very well as well on the back of the reports, the Bloomberg reports of additional stimulus coming through from China in the shape of about $137 billion worth of potential infrastructure spending. But today, futures are actually pointing lower. Taking a bit of a pause again, we had a Fed minutes out later today. The inflation prints coming through from the US as well. Maybe investors waiting for a little bit more clarity after what is arguably being a little bit more dovish commentary from these Fed officials. DAX futures in pointing off by about 0.3%. We're in the UK, the FTSE 100 pointing down by 19 points, 0.2%. And over in France, the CAC are off by 0.8%. Of course, the luxury sector will be in focus with those disappointing earnings out of LVMH.
Yeah, absolutely. That could be a sector to watch at the start of trade for sure. Let us find out what has brought Pretty Bits' mind this morning. Pretty, we talked quite a bit about the treasury markets with our guests earlier on this programme. What captures your attention then that comes to occur?
Well, a lot of cross currents here, and we're talking about the bond volatility of the last couple of weeks. We're seeing the momentum selling off the long end of the curve match with the flight to safety from international investors into U.S. Treasuries after geopolitical conflict. Then on top of that, add on some pretty dovish Fed speak, and all in all, you get a little bit of a messy yield curve. At least that seems to be the investor take. Now, let me walk you through this. Essentially, right now at the bottom, we're seeing a 2-10 bond curve, the traditional kind of recessionary measure. Historically, every inversion of the 2-10 curve has predated a recession. Of course, that curve has been inverted for a very, very long time now. That being said, that curve is now flattening, and there's a couple pieces for this. Simply the idea is when you do see that curve flattening, the immediate thought is, does that mean growth in the United States is slowing down? Is that what the expectation is? That growth 10 years down the road is not going to be as positive as we thought? Well, yes and no. Yes, there is that idea that, okay, perhaps that recessionary call is coming back in through the function of the fact that the bond market is now pricing cuts early and earlier. The geopolitical volatility is really helping that sentiment. The other piece of the equation is that, look, you are also seeing the Fed's balance sheet run off as well. The concept of market plumbing or digestibility is also in the talks right now. Remember, you did have that 3-year auction treasury bonds yesterday that just completely did not deliver. We have a couple of other auctions throughout the rest of the week as well. So, Anna, it's not just about the bond momentum or what you think the U.S. economy is going to look like in the next 10 years. It's about how people are positioning ahead of a lot of different cross currents. And right now, that's throwing, for lack of a better term, the yield curve into a little bit of whack.
Okay, so we'll keep an eye on the yield curve, very much being influenced then pretty by the Fed conversation, as you say, also geopolitics in the mix, and plenty of eyes on what's going on in the Middle East. So let's get an update there. Israel's airstrikes on the Gaza Strip have killed over 900 people, while the death toll from Hamas's attack in southern Israel has climbed to over 1,200, according to official sources. Both sides have reported mostly civilian casualties. President Biden says the U.S. is speeding military assistance to Israel following the militant group's surprise attack over the weekend.
The Congress returns and asks them to take urgent action to fund the national security requirements of our critical partners. The United States has also enhanced our military force posture to strengthen our deterrence, and we stand ready to move in additional assets as needed.
Let's bring in Yusuf Canella now, daybreak Middle East and Africa and Berlin. Normally, of course, in Dubai, covering the region. He's here in London this week. Yusuf, bring us up to date then on the international politics, how that is shaping around this conflict.
Yeah, I mean, the rhetoric was very strong from the United States, and basically, yes, sure, they have all the support they need, but unlike the Ukraine assistance where you had a clear breakdown in terms of X number of guns, Y number of tanks, we didn't get it this time around. So just the promise of the world's largest aircraft carrier and ammunition, but we suspect it goes far deeper than that, and we'll await details. I'd also look out on the diplomatic front. U.S. Secretary of State Anthony Blinken is going to be flying to Tel Aviv. He's going to be going to Jordan, to Amman as well. And they're going to try and see if we can find a way to get all the stakeholders around the table and bring an end to the violence. I also point to some commentary from the Turkish president. I mean, talk about irony within the own ranks. So within the ranks of NATO, you've got Recep Tayyip Erdogan now saying that any allocation of U.S. assets to this part of the world, or the Middle East specifically, or around the area of Israel, is only going to create an environment for a potential massacre. The Saudis have been working aggressively as well in terms of trying to find a diplomatic off-ramp. They're saying they're going to try and make an intervention as well, at least diplomatic.
Okay, Yusuf Gamal, I think the latest in terms of the geopolitical shifting sands around this conflict. We appreciate the update. Thank you. Let's check in now on what you need to know heading into the Open. Sam Umster joining us from the markets today. Blog at the speech from the opposition Labour Party leader here in the UK, Keir Starmer, yesterday. So what stood out to you? How well received was this after he shook off the glitter? The glitter that was showered on his head in the opening seconds last week.
Well, the list was actually taken quite well, of course, because he managed to literally shake it off.
The pitching t-shirts.
Yeah, I'm sure. Yeah, it allowed him to roll his sleeves up and do all the things that I think politicians like to do. I think the speech itself was pretty well received because it was very policy heavy. There was a lot of actually fairly clear ideas about what they would do. It was very much the kind of speech you hear in an opposition that feels very confident that they're going to be in government over the course of the next year or so. You're going to be competing very hard to be. Particularly around housing and sort of very clear ideas about this is how we're going to do this. Some of those will raise some questions, particularly at the NHS, from a political standpoint. Some of what he said may well face a little bit of opposition, but generally pretty well received from business community.
Yeah, just show some pictures of with the protester who applied the glitter and then just so quickly dragged away. UK wage growth also being huddled on the block then, Sam. This is a focus for the Bank of England, so it's the latest reading.
Yeah, so this is a survey from KPMG and the RSC, and this is quite an important report because the BOE has cited this report in the past, and wage growth, according to this, is slow. And actually, it's worth noting as well this morning we had a results out from Page Group, one of the big recruitment companies, also saying the same thing. The amount that's being given to candidates as salary increases is also slow. So overall, fairly good signs in terms of the path for interest rates.
So how much weight should we put on this comment and the analysis, the take from the IMF, that the UK, the BOE, will need to hike to 5.5%?
Great question. I think actually if you look at the data this morning, it sort of undercuts that to a certain extent. Wage growth is extremely important, right? So particularly in the BOE sector, and it does appear to be so. There's particularly lots of signs of softening in the labour market. So yes, there's always the possibility, and as we've seen over the course of this week, there's always the possibility of these external geopolitical shocks coming into the market and changing the picture. But I think overall at the moment for the UK, it appears that everything is moving along as traders are currently pricing in the rates remain high.
It's very interesting the way that the UK establishment, I suppose, gets quite focused on IMF forecasts. There are plenty of other economists making forecasts every day about where the UK economy goes. But it is those forecasts from the IMF, those guys in dark suits who once stalked Whitehall. Let me ask you about, so you mentioned what we've heard around the labour market, which I think is really interesting. In the context of what we heard yesterday from Robert Walters, we're getting interesting insights, aren't we, from these recruitment companies as to which jobs are in focus. I mean, Robert Walters said that legal jobs were in demand as finance and tech were struggling. So it's quite a nuanced picture.
It is quite a nuanced picture. Yeah, that's right. And actually their report was interesting because of that, because it's mostly technology and finance that are struggling with the legal jobs doing a bit better. The regions are doing well. So London in particular is seeing significantly more weakness than the rest of the regions of the UK. Page Group doesn't have quite so much detail in their report today, but the overall picture does remain pretty poor on the judgment.
Sam, thanks very much. Thanks for the update. Sam Munson from the Markets Today blog. You can get more from the team that put together the blog. You go to the front page of the Bloomberg UK website. You click through to the blog from there, or you can type TLO you go onto the Bloomberg tab. Coming up, we will put luxury stocks in focus. Luxury consumers, perhaps they're sobering up. They'll be able to slow through the sales. Mixed estimates in most divisions across the brand. We will discuss that with analysts next. This is good.
tournament has grown 50% since 2018, $100 million. But the prize fund still lags far behind what men compete for on the PGA Tour.
really important. These are the very best in the world. But we also then dig in and say, okay, what's the 50th best player in the world making? And what did she make last year? I've asked happy with my members many times to say, okay, tell me where we are exactly in the middle of the season, at the end of the season. That 100th player, our goal would be to obviously have that player make considerable amount of prize winnings, and we're going to work really hard to do that. Having said that, we do need to continue to focus on ways to provide opportunities so that 100 best player can cover those costs that it takes for them to be out there on the golf course. That's hiring a caddy, that's travel, that's strength coaches. We're helping to provide stipends for health insurance or create a tour-wide health insurance program. Ability to create more discounts for travel, for hotel and car and all those things that really cost them a lot. To meet these objectives, LPG leadership collaborates creatively with sponsors. We work with some of our corporate partners to say, help us solve the problem. Help us create a fund that will allow our players to get to the first tee ready to reach peak performance.
To markets today, a little over 15 minutes. The cash equities open European futures currently up by 0.6%. Certainly the luxury story will factor into the equity moves at the open today. And LVMH's sales is front and centre in that growth softening in the third quarter. This is shoppers reigned in spending on high-end cognac and costly handbags, more evidence that the post-pandemic luxury boom is waning. Joining us now is Sweta Ramachandra, who's foreign manager at Artemis, who specialises in leading consumer and luxury brands. Sweta, good morning. How concerning are these results then for LVMH?
Well, I think to set in perspective, truly there's a mix in the key fashion and leather goods division, which market key watches, where it grew by 9% instead of the expected 10 to 11% range. It's not all doom and gloom because they did see, for example, Chinese consumer cluster continuing to grow about 40% on a 2-year stack. I think where the big disappointment came from was the pace of deceleration among domestic European consumers who had reined in spending far more quickly than had been anticipated, down between low single-digit to mid-single-digit rates in the quarter just ended. So there's some puts and takes here, and I think the question of deceleration was always a sort of given that the company grew by about 23 in revenues by 23% last year. These rates that they were seeing growth since the pandemic were seen as not sustainable, and it was a question of when we would start to see those decelerate rather than if. And now that we're starting to see them decelerate, I think the question is really where do we settle out in terms of growth rates, which can prove a sustainable base for growth going forward.
So what do we learn about the luxury consumer right now, and where we'll see resilience and where we won't from these numbers? Because it did seem that there was some weakness in fashion, also some weakness in spirits, and I wonder what that tells us about the macro backdrop, the fact that the disappointments were not limited to one area.
Yeah, I think there's clearly a divide emerging between the more resilient higher income consumer and the more aspirational middle income consumer that's been carrying on for some time now. But it's particularly soft because categories like cognac in the US, for example, which is particularly affected in terms of soft demand, but also in inventory destocking issue, are a function of their sales exposure to more middle income aspirational consumers. On the other hand, within their jewelry division, they call that globally as doing better than Tiffany, which again highlights the sort of relative outperformance of brands that are catering to a more resilient operating income consumer.
Okay, that's an interesting kind of brand breakdown, Sweta. What about the consequential regional shifts? What is standing out to you as the most significant change regionally in terms of the demand for LVMH's goods?
Yeah, I think if we look at the European consumer, this was a relatively mature consumer prior to the pandemic, barely increasing in terms of revenue growth, other than carrying tourism as a region for the group. What has happened over the course of the last few years is that domestic European consumer has seen a somewhat of a renaissance. They're spending on luxury goods versus pre-pandemic levels has gone up by over 50%. So that is clearly reducing from a very high increased basis of the pandemic as a result of the inflationary pressures that were all particularly in Europe, and that has been a key source of negative surprise. What I was actually pleasantly surprised by was that the U.S. consumer has stabilized, and this was the first consumer to start showing signs of a slowdown for the company about 6 to 9 months ago, and it appears to have stabilized now at a lower level, while the Europeans have been later to catch on. The Chinese cluster is continuing to grow at about 40% on a 2-year stack, which is the same as it was in the second quarter. Perhaps some disappointment on why it hasn't accelerated, and for that, perhaps we need to see a bigger return of outbound Chinese tourism, particularly to Europe, in order to see that happen.
We've seen some confirmation of pricing around Birkenstock, so another consumer brand sweater. This listing was being closely watched in the United States. We see the controlling shareholder, El Catterton, which actually links to the LVMH story, doesn't it? We're seeing them keeping a sizable stake in Birkenstock after the listing takes place. Does that give you confidence that they think good things for the future of the business, or does that create stock overhang that will worry investors?
I think at the moment it's a question of sort of market sentiment and valuation around the stock, which is coming in a pretty hefty mooted valuation of about over 5 times sales, which is kind of ahead of best-in-class consumer brands companies at the moment, given the weakness fell off the market. So it could be a question of market timing and sentiment and not wanting to basically flood the market with shares at a time when the appetite may be lower than it otherwise would be.
Okay, interesting kind of your views there on what looks like a fairly stretched, at least according to your take, in terms of the valuation then at Birkenstock. We had the team at Bloomberg Intelligence as well outline potentially the upside for this company if they manage to kind of double down on under-penetrated markets and expand their distribution, their manufacturing capacity, and maintain their margins. Are we in an environment where these kind of names can maintain margins, or with Birkenstock at LVMH, are we looking at an environment where in slowing growth, some of these margins are going to have to be given up?
Yeah, that's exactly the debate of the day, is that in a slowing environment, how much of your costs are really fixed and how much are variable that can be adjusted. We have seen the industry overall do a good job through the pandemic of making many more of their costs variable than it used to be. That said, there's still a hefty fixed cost base that needs to absorb a lower volume of sales, which could lead to margin pressure all but for the rest brands. I think this is an environment really where we're going into where the bigger, better capitalized scale brands are positioned to gain significant market share from their weaker competitors, and so that's really the end of the period that is likely to be better.
Sweta, interesting to see that Birkenstock is saying that they're going to use some of the funds, at least, that they raised here to pay down debt. Given we're in a rising rates environment across the sector that you cover, across these consumer goods companies, is this going to be something we see other businesses do?
So I think that is a particular function of its ownership under private equity, because the listed public companies in the consumer space are actually very well capitalized, under very conservative balance sheets, typically either very low gearing or net cash positive, which I think makes them a relative safe haven, even in a slowing growth environment, although the market will need some time to digest the current earnings reset in order to get comfortable with the long-term compounding appeal.
Sweta, thanks so much. Thanks for joining us. Sweta Ramachandran, fund manager at Artemis, taking us through one of the important sectoral stories that we're covering this morning. We'll certainly keep luxury stocks in focus. Let's get a broader look at stocks that we're watching. Joe Easter from our equities team joins us with a briefing this morning. And Joe, good morning. I think we're starting with chips.
Morning, Anna, absolutely. So Samsung overnight jumping around 3% despite the company in Hong Kong reporting a 13% drop in their revenue.
Morning, how are yourself?
I'm good.
Alexa, volume down. How was yesterday? Did you get the email from TPT?
Yeah, I have it in my wallet so I can withdraw at any time.
Nice.
Yeah, it was a really good day. I made like $4,000 on that account yesterday.
Ooh la la.
Yeah, it was nice. I'm close to getting a withdrawn Apex too. I didn't even really notice.
That's good. That's good. It's meaning not
Yeah.
taking the profits.
Yeah. So I think I'm like I need $600 more, and then I can request $1,000 payout on Apex, but I have to have that 10 minimum trading days, you know.
Yeah, yeah.
So I'll probably just like get up to the profit target, and then I have my 30% rule. Like I've done good on that, so I'm just gonna trade micros once I get to that profit, so I don't blow the account before payout, you know.
Yeah, yeah, yeah. That's, yeah, be careful and that's it. That's
Mm.
good. I'm long from 86.
Yeah, the long was good. I was just about to say the long's at 70, 74, 75 looked really good.
Yeah, but now we are on a POC here, value area high. Trading stop loss and don't look like they want to go any higher. I think so. I want to close it because they can retrace.
I'm short. I'm short on the day. I'm short biased.
I'm long on gold definitely today. Okay, yeah, I'm closing. You're not going anywhere.
Yesterday was such a nice day, actually.
That's true.
For the long, like I'm just a little annoyed that I closed my long.
Yeah, that was the worst thing what we done both of us, and it was going nice one direction. And the short, when we saw that the short is cooking, they taking so long there and everything. Did you notice that they bring POC back later on into the, what's the name of it? Into the area of the drop.
Really?
Yeah, yesterday POC have like a triple, it was split up in 3 different areas.
No, but like you said yesterday, probably all the shorts that got in, they were scaring them away that whole time, just making them close the positions.
Yeah, but I closed my short bit too early because it was amazing. On ES, NQ it's okay, but the ES is go even lower.
Really? ES was better?
Yeah. On ES, actually, I was thinking about that. Okay, I wouldn't get much more. It's only $100 more, so that's okay.
Yeah, exactly. I would have gotten like $300 more if I would have held, but why would I hold a mini when I'm up almost 2,000? I'm not gonna hold that for longer. Especially because we knew we were ranging, we weren't gonna. I'm just surprised that it chopped for the rest of the day. It just had that drop and then it just chopped. Nothing happened. But Frankfurt is moving pretty well, honestly.
Today? Don't think so. They just have a. At the bottom, they was trying to grab the stop loss. I was half a point away from taking off my stop loss, and then they make move up and it stands still. For an hour, they move only what 15 points. Good that I closed my long.
Yeah, actually it didn't move much from like 92 to 76 and 76 too.
And there is no way that you'll catch the bottom of the bottom, which they was like wicking it off. So if you was lucky, you'll enter at 80.
Yeah.
Ooh, I closed it at the top. That's good. I'm glad.
Nice.
As well, didn't feel right to hold.
I'm probably gonna do the same thing as I did yesterday and just scalp.
Yeah, I wanna do the same on London because I cannot see any direction.
No, there won't be direction until after PPI, but I don't even think there will be direction after PPI because we have FOMC. So the move from PPI could be totally fake. Because the move from PPI, that's just going to set up for what FOMC they are thinking, because FOMC minutes is very important.
Oh yeah, I should just swap to shorts at that time when I saw the rejection.
No.
Ooh la la. Yeah, we're not doing anything now. Yeah, come back to my entry.
I want us to come back down to 15,000 to 22 to go long.
Yeah. Okay, so this one is not valid anymore because we crashed that. If we will take it from here, then that's okay.
That candle yesterday on the shorts,
50 points.
that was I just looking right now, that was a 40-point candle.
Yeah, I was like, what the fuck?
Yeah, that's insane. I just noticed that now. I wasn't really paying attention when I was having money.
Okay, so from the head and shoulder pattern, from the top of it, actually we are in a golden zone now, if you need to check it this way. Yesterday we hit the golden zone and start dropping.
On MQ?
Yeah.
Oh.
This was low, this was high. That one was as well quite nice. And check as well. Let's see where will we retrace to. 1 minute to London Open. And we'll put one sneaky long. Or not. Yeah, I will try one long for the scalp.
You're long?
Yeah. Come on, London.
I don't know about you, but I trade so much better on like a prop firm than I do on a live account. It's just like different.
Because you've got a bigger risk to reward. You can have on a live account to have the same risk, you need to have a huge account.
Yeah, I know.
And mentally you are prepared completely different for this kind of the
Yeah. My goal is to get like a 10K account that I can trade with, because then I can risk like $100 to $200 per trade. Like 1 to 2%.
Yeah. Come on, you just leave this fucking area. Ooh, gold. Ah, that is a trade. It's $500 up. Oh la la.
Ooh, are you long?
On gold, yeah. And I'm moving my TP higher. I was almost hit it.
Like I said, I feel like everyone's long on gold.
Yesterday we didn't go anywhere. It was short day yesterday.
Really?
Yep. So I open only one contract, and the question is, they proving me that yes, they wanna hold it, the area, but I am not super convinced about it yet. Oh yes, you already there. Fuck yeah. Yes, broke already the resistant.
Let's see if NQ can even get above the swing high. That is at 303.
Yeah, this is what I don't like now. The rejection.
Mm-hmm.
Exactly from they just weak off the previous high and rejected. Yes, at least broke the previous high.
It's weird because NQ, which is usually the strongest one, was the weakest one yesterday.
Yeah. So far today, the strongest is ES, but yesterday was the weakest. And now towards the end of the day, ES was the weakest.
Really?
It dropped the most. NQ was fighting and was just staying in area.
That's interesting though, because you said ES and YM were the strongest.
Yes, at the beginning, and later on, ES just fed up, was going lower and lower and lower, and NQ was fighting to stay at the level.
That's so weird. That's really weird. Are you saying that like if you would have gone short, if I would have gone short on it ES, it would have been a lot more points, or?
If I'll keep my short, there will be more points, yeah. But still, I will get only $200 more, so it's not like.
Oh, no, that's not that much.
London, why are you so choppy? Yes, already broke.
We're gonna be. What?
Yes, broke the. Why I didn't open? Yes, it was such a nice open. Broke the trading stop, and Q didn't broke it yet.
On the bearish trailing?
Yeah, bearish trailing.
I mean, we're gonna chop until PPI, so.
I know, but I don't mind the chop to be like 30-point chop, not 10-point chop.
No, I think it's gonna be like that one day where it was like 10 points. It was fucking untradeable.
Oil, ooh la la, as well. I didn't open you, and I saw that nice rejection from the bottom. And oil, it's flying. ATR 3.6, which is nothing. We are on a POC, and we don't want to go higher. Should I close it and wait for a retest of something to orient?
Do you think if you can like request like payouts every day and pay yourself out every day with a prop firm, you should do it, or do you think like you should do it like every day?
I will do it every day. The reason why, if it's not cost you anything, just protect the money which you're earning.
Yeah.
Because you know that you will have a one bad day and something will click in your head and you can lose the account.
Yeah. So just take the payouts, when you can,
Yeah,
basically.
yeah.
Mm. It's really nice because so I got out of the trailing drawdown, so now my account balance is at a minimum. So like it's not trailing me anymore. I just have a daily loss limit,
Ah, but
which is nice.
when you do the withdrawal, it will start to training you again.
No, no, it stays at a minimum once it reaches.
Ah, okay, that's amazing.
Yeah, it's very nice. That's the thing that I like about Take Profit Trader over Top Step is Top Step has that 5 days, but with Take Profit you can withdraw every day.
Yeah,
So it's really nice.
and when you just kick off to remove the trading drawdown, actually maybe I should think about that. I had a TPT earlier, but for some reason I was I don't know, didn't go as well. I was just getting the accounts and I couldn't hold them long enough.
Mm, yeah, that's kind of been the problem with me too. Is that I've gotten 2 payouts from Tick Tick Trader, but then shortly after I lose the account, which was very annoying.
Yeah. Hmm. The Asia session was shit. Frankfurt as
Is it?
well.
It
And London look like it won't be any better. Okay, I just
yeah,
protect 200 bucks. Closing.
nice. But Asia session's always shit.
Yeah, but no, it was very, very shit. It wasn't like almost only shit, it was very shit.
Yeah, that's the session I had to trade when I was working full time. Fucking sucked.
What you was doing for the work full time?
In the summer, I was working on a
Ah, okay.
forklift operator, but they actually I'm 19. They offered me. I started talking about trading to my boss because he like had a meeting because I told him I was gonna go play hockey in Germany, so I had to quit, right?
Yeah.
And I started talking about day trading and stuff like that because they have kind of like it's a lumber company, so they have like lumber, I guess, kind of salesmen that trade the lumber.
Yeah, yeah. Well, they
Um,
need to know actually what's happening to lumber all the time.
yeah, yeah, and so I started talking about trading for him, and he offered me a sales position that makes like 70 grand a year.
Okay.
So it was a very nice offer. I don't know, I want to go full time day trading, but if like if I need some money, I can go back to that job, and they said they'll take me anytime without a college degree or anything.
Oh, that's
So
good.
it's nice. Yeah.
But you prefer hockey now?
Yeah, that's why I went to do hockey and day trade. But I want to day trade full time, like eventually.
But advice, because I'm looking for like some side job or something to do. Just find something to do. Except that the reason why, if you will go too much into it, it's messing your head. I was really when I didn't do anything, it wasn't too good for me. Now I start running. I preparing myself for the triathlon. Start to do the other stuff. I'm looking for some small side job, even where they're not paid. Like do something, be with the people, because.
Mm,
But by sitting on the front of PC, even talking to people, whatever, it's not as healthy for your mental being.
If you're trading full time, like all the time.
Yeah. This is
Are
why I
you talking
started.
about it just gets too stressful, or?
Yes, but you're just losing the connection with the world.
Yeah, that's true. That's very. I've noticed that a little bit because, I've been going on more like 7, 8 hour days where I can like trade straight, and it's like after I'm like, geez, I just like yeah, I made like three grand, but it's like, well, I just like I don't know what to do after.
Yeah. So
You know.
what I need to try to do is really like yesterday as well. I should stop yesterday when I was like 2k in profit. It was before the New York session, and just go out do
Mhm.
something else on whole afternoon instead of just sitting there.
Yeah.
And I lost quite a lot of that profits. Then I gained it back at this drop. But what was the point of that?
Yeah. So did you end the day at 2K or higher?
No, higher. But
Okay, but it wasn't worth it.
it wasn't worth it because it was loss of hours. Okay, it was I think so 27 or 29 on different accounts. It was different amount. It was 3 accounts I was trading, but there
Mhm.
wasn't how to say that. It wasn't worth enough for the time which I spent on it.
What you spent? Yeah, it wasn't. I understand. It wasn't worth the time that you spent to do it. You would rather just got out of London and then just
Yeah,
done something else the rest of the
If
day.
I finish London so good, it was just okay. Today, just go and do
Yeah,
shit you want.
yeah. Like do you do like other side jobs like for money, or do you just do like side job just to like kind
Charity,
of find some
charity, but
what?
I looking something for like small income, just to have in my head that I've got some other income.
Yeah, that makes sense. Yeah,
'Cause I was on the company for all of my life, few of them, and I
yeah.
sold it in November, but. Definitely, I don't want to go back to that kind of the thing. Oh shit! You see, I closed it too early. I didn't want to go back to that because it's looking after all of the people, looking on the wages and everything. It was too stressful.
Mhm.
Oh fuck!
No, that's what like I don't know. So a lot of my friends go to college and stuff like that. I'm not going to college, but some of them are paying like 60,000. So in the U.S., it's absurd for college, and some of them they're going to like a private school, right? So they're paying like $50,000 a year. So that's almost 200,000 in debt after you graduate, and they're probably going to be working for 50K
I,
a year, right? That's on like 50K. You think that's a lot, but it's really not. Not now,
you
not
need,
with inflation and everything.
yeah, you need to survive, pay the bills, and pay the whatever it was there taken from you.
Mhm.
That's true.
Oh, y'all long or short right now?
I was long, but I closed it because we couldn't find the direction. So I'm flat on NQ, but I'm long on gold.
Yeah, I'm flat. Also, I'm not in anything yet.
But there will be a nice shortcoming for NQ.
Yeah, I'm looking at that too.
Dollar open red, that's good. We're just pushing it higher. The ES as well was a nice entry which I missed. That's suck.
Like the ideal for me, Colton, would be able to work a job and get money and then trade also. But with most jobs, it's so stressful, like working and then trying to get into trades and stuff like that. Like it's not good. And that's when I was losing is when I was trying to trade at work.
Yeah.
Just it's not good. So it's more like for me, I'm trying to find something to do. I'm trying to do trading full time, but do something on the side also instead of working full time doing trading on the side. You know.
Let's see, can we start? No, not yet. So the best is the hockey for you is perfect now.
Yeah.
And then later on it's just find some own business. Just, I don't know. I was thinking maybe here in the place where I living, I will just open the e-cigarette shop. You can just sit there inside with the laptop and do whatever you want.
Yeah. That was a nice short.
Fuck yeah. See, I was like about to press it and no. I was looking for a few points more, 315.
What the fuck is that candle? I was a point away from being ticked into that.
Okay. This is the reaction for the sell orders from what's the name of it?
From yesterday?
From yesterday, yeah.
Yeah. I want to come back up and
I'm
see if
long.
I can get filled. You're in long?
Yeah.
What the fuck?
Because they will be back there.
I know, but I'm waiting for the short to go back there.
This is a quick scalp trade.
Yeah, you should get your points pretty easily. You enter off that moving average and the 4 hour?
No, on a view up extension.
Oh, okay.
Okay, ES got the proof it and view up. I close it, but I didn't close it the way which I wanted. We didn't accept the, what's the name of it, session view up. Now you're going, MQ, why are you doing this to me?
Did you close the MQ?
Yeah, because we didn't accept the session view up, they reject from it straight away.
Hard because I don't have any levels here because we ran up like 800 points in 3 days, so I have no levels up here anymore.
There is plenty of levels which you don't know which one are good, which not.
No, I'm talking about on like on the opening ranges. I only have like old levels from previous like all-time highs, but I usually remove my levels.
That was really nice entry. I entered at 92. That's okay. We got the TP. The bullish is finish, search.
Let's just go a little higher so I can go short.
The oil entry was really so nice. This one I cannot just imagine. It will be $600 straight. still, but this isn't right. Oh shit, and now it's really showing me that I shouldn't. Yes. They teasing us.
We're just gonna be ranging again, so I'm just gonna be playing shorts and longs the whole session.
Yeah. Yeah,
I'll take long.
that long was perfect entry from the VUB extension. We can play VUB extension to VUB extension and that's it. Normal. This should be my first TP now.
Oh, I'm gonna go short soon.
See, VUB extension, we hit it and price rejected.
Yeah, like right away. Side points.
To dobrze. To dobrze, cieszę się. Actually, they building orders on top of the above the value area.
Is that what you think happened yesterday on the short side? We were just building orders for like 2 hours.
Yeah.
Yeah. Yesterday was like, it looked very bullish the whole time, to be honest.
It looked like and it was.
It was bullish, yeah.
Yeah, I'm looking how to enter to my longs on oil because I really was sitting and I saw this long happening there and I was like, no, maybe a bit later, and it didn't happen. Okay, I'll be back shortly. NQ is bullish, but okay, pullback changing red now. Rangy, I will be rangy because waiting for the news. I need to wait till like 1:30. Okay, what's the volume tradable today? So far it's quite small. Alexa, volume up.
Once suppose you're on a plane and somebody realizes who you are, they say, I have $100,000, I don't know what to do with it, where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago, because treasury bills are 5%. So I would say, you know.
Yeah, the ES broke the trading stop and Q didn't. Okay, and we week off of the 3 minutes trading stop. We got trading stop on 3 minutes at the top and at the bottom, and we are in a very short order block, and at the bottom we got the bullish order block. That will be a shit show.
And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, a million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because I think
VIX is still red. 1 minute only change green.
not just excited by it.
And what's the best investment advice that anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting.
And that's going to be the same thing as yesterday. Just buying the bottom, selling the top.
And we've got the trend line, as you can see. It's quite nice bullish trend line. The question is, can they like make the Alexa stop? Can they push the through the VWAP extension? So far, not really.
Did we just? Oh no.
Come on, just break the high, go to 315, and then I will know what to do.
350?
15.
Oh, 15. Why? What's at 315?
I
Nothing.
wanna see if I can short there. Dollar going lower, VIX going lower, and Q, time for you.
This is Markets Today for 30 minutes into the European trading day here on the top stories. The US speeds up military assistance to Israel. Turkish President Erdogan criticizes President Biden for sending warships to the region. Elsewhere, treasury yields dropped by some of the biggest margins this year.
Okay, oil reject the
Raising interest rates. Plus, LVMH plunges briefly erasing this year's gains as the world
previous daily open area.
sales growth. Other stocks in the sector are also trading. So Tom, a focus on what a market that is deceptively calm on the surface. So overall, the stocks and bonds are not moving anywhere. But
So indices should go higher now.
Let me look at what we're talking about the luxury sector right now. We're pushing past the stimulus story from China, and there's still expectation, of course, markets still expecting that maybe you're getting to a point where the Fed is at pause, given a number of officials have come out and talked about the work that's been done by the run-up in years in terms of tightening financial conditions. That, of course, remains a key factor. We get statements out later today, we get inflation data, EPI out today, CPI out tomorrow. So by the end of this week, we should have more clarity, arguably, in terms of where the Fed goes.
We can go back actually to yesterday high before the news.
385?
Yeah.
You think so?
They can try to do that before the news. Just drop on a news and then go up on FMOC.
Oh, are you talking about just yesterday's high in general today or right now?
Yesterday high.
Yeah, but are you talking about you think London can do it or?
Yeah, this is what I'm thinking.
Really?
Then drop, pre-market drop, pre-New York drop, and New York drop, and then go high on FMOC.
FOMC is gonna be fucking volatile.
That would be good to open like 5-7 micros and as well scalp.
I might stay out of FOMC because
if you if you don't want to blow up the account and your accounts are at the like apex almost with drafts, and it's not worth of the risk.
No, it's not. I mean, I can trade FOMC just fine. I'm good at trading, but I don't want to take the risk. It's very volatile.
You can do on demo, or you can do on some other account. Okay, yes, got the white candles clicking in. Oil almost give up all of the gains from the Frankfurt. You cannot go higher. Yeah, there is nothing there except these two candles. There are 12. I was thinking to go to 15.
It was so annoying. I was 0.25 from getting filled again.
Don't try short yet. I'm worried that really we'll go to the 12 and they will just start to very hard trading up.
Why do you think we're gonna trend before news though?
Because on the news there will be a drop, and as well they showing us on a FIPS that 50% of yesterday is holding us. We are very bullish. We are above 50% of yesterday.
This is creating the worst ever humanitarian crisis. And the second thing is that these people are constantly bombarded by Israeli airstrikes.
I might look like for a long then if we can come down.
I want to see what's happening if you will be accepted in a value area and what's happened on a trend line. I open long on a VWAP, so I'm long from 92.
Nice.
But as well, only one contract. Earlier on I had the 2 and I closed them too early. Okay, isolator showing that the bears try to come. We got another divergent on a search.
To do in a situation where they have seen children murdered in front of their families, babies beheaded, and a number of their citizens, over 100 of their
Holy
taken hostage.
Yep.
Oh.
Is deemed a terrorist organisation by the UK, the EU, and the US. What would you have Israel do in that situation? They have no other option there.
View up extension. That was entry long, if he was looking for entry long.
At this very moment, they are really slaughtering children in Gaza. They are really besieging Gaza. And what Mr. Guterres, the UN General Secretary, said is a war crime, a violation of international law by blocking food and supply and water and electricity. civilian population in Gaza is not responsible for the fight. And you cannot conduct collective punishment against the whole population because of what has happened. As you know, my position is very clear. I am a person who advocates non-violence. I am against the killing of any civilian, whether Palestinian or Israeli. But what has happened does not justify slaughtering Palestinian children and also planning to deport the people from their homes to another country. What I told you about the issue of Palestinians, it was very clear. The Israeli military spokesperson says that all the people in Gaza must leave Gaza and go to Egypt. That means it makes Egypt.
Well, I have heard Israelis suggest that Egypt could open the border and allow Gazans to leave. I suppose Israel would suggest that's because they're trying to get at Hamas specifically, who they deem, and many in the West deem to be a terrorist organisation. What would you like Egypt to do, Mustafa, in this situation? Is there a role for Egypt to open its border and to allow some of those in Gaza to leave even temporarily?
No, 70% of the people in Gaza were completely cleansed by Israelis in 1948. They all were deported from the towns and villages which were erased by Israel and became part of Israeli. These are refugees. You can't enforce on them another ethnic cleansing. And Egypt can do asking and demanding that it will be allowed to supply Gaza with water, with food, with medications for the civilian population there. Nobody can take 2.2 million people, 2.2 million civilians as hostage and also try to enforce on them an ethnic cleansing with airstrikes. This is unacceptable. You ask me what are other options. There is a very simple way which is good for both Palestinians and Israelis. It's to immediately have a ceasefire, to start a process of peace, immediate release of all prisoners on both sides, an immediate exchange of prisoners, and that would keep their lives safe. But at this very moment, Israeli airstrikes is threatening not only the Palestinian lives, but the lives of 200 Israelis who are in Gaza now. That is
I don't wanna go.
It's actually cold as hell in this house.
It's cold. I started using heating here.
Cold as fuck.
We had it was 4 degrees tonight at the place where I live in UK now, and from Saturday temperature will drop in the night to 1 degrees.
Oh jeez.
Don't tell me it's not the best news.
Yeah.
Gold, come on! I really love my gold trade.
Well, yeah, that was a good long on NQ. I missed it again.
I didn't add to my NQ, but I opened a one on ES.
Nice.
We are only in an expensive area, then it's a far away to go to the very expensive, so we can still go higher and higher. Come on, yes, you broke the high. You can go higher. VIX don't give a fuck because it dropped. Dollar had a huge drop just now. I'm just waiting for the price to break up to do some move, not like arranging this.
I don't think we are getting the move though, that's the thing.
Shitty area.
I think we're just going to be arranging. I think this is a good short right here, to be honest.
I need to see what we'll do at 15.
15. I'm not going to get in short just because I'm scared of like a 5-10 point candle coming in and stopping me out. So, oh wait, so for some more confirmation on the shorts.
Ooh la la, the gold is doing so good. Dollar is a shit show. It's dropping like a rock.
Really?
Yeah. The last 3 candles are like huge.
That's really weird.
But this is telling me to do not be so happy about my longs.
No, if dollar's dropping, that's good for the Nasdaq.
But it's dropping towards the resistance, support, sorry.
Oh, okay.
Okay, I'm flat for now. Because we
Nice.
hit 314 and we reject. 313.5, okay, I'm flat on ES and MQ. And I closed the gold as well. I closed the gold on 800 and it was 1100 was target, but if dollar will find the support now, then it will be very, very fast change of the direction. Good start of the day, 1282.
Nice. I haven't even taken a trade yet.
So for now I am happy and I don't need to touch that. Gold left very expensive on a small setting, so one of the reasons why I close it. And we hit, what's the name of it, pivot. So we can reject now. And risking anything from 800 to get another 300, it wasn't worth it. I just try to put to my head this way when I'm taking a trades. Especially when we don't have a direction.
Yeah.
And look like I closed that gold at the top. Because dollar hit the support and rejected. Happy with the yes trade. Very happy with the yes trade.
Today, 46 minutes since the European trading day this Wednesday, and European equity markets actually mostly in the green, apart from the Technolog, which is down about 1% this hour. Let's go to the source of that negativity. Shares in LVMH are under pressure today following disappointing third-quarter sales growth. The drop saw the French luxury goods line briefly erase all its year-to-date gains. Let's get to Invest Caroline Brennan, who joins us now from Paris with details. Caroline, is LVMH resisting the slowdown in China? Certainly something negative in these numbers.
Mr. Valentine, and at least from the investor reaction in the share price this morning, LVMH, of course, different story from the beginning of the year when it actually was seen as the new tech driving the tech body. Today,
And this is holding us for now.
soft demand in the US and also soft demand from their champagne.
Luckily my fingers they not itchy to open the long, the short, sorry.
Consumer. If you look at the digital biggest division, which is the leather goods division, is up 9%. That is missing estimates. That's of course Louis Vuitton, Christian Dior. The wines and spirits division minus 14%.
But I just opened the long on oil.
That division
Nice.
from the soft demand for cognac in the US, soft demand also for the jewelry and merchant division, even the Bulgari is doing
Breakout on yes, it means we should get lower.
there is only one bright spot, which is the
I'm short.
and some trends at Sephora.
Good. I'm not convinced yet.
That's why I have a tight stop. 312's my entry. I'm
Okay.
up almost 5 points now. 5-point stop. Just looking for 10 points. Kind of a scalp.
I'm not convinced yet because it looked like yesterday drop was preparing and today the same way they building the move up. Very small move and a few candles at the same level. Very small move, few candles at the same level. Ooh, oil come back to my exit and wanna go higher. And
Ooh. I will close.
it took you out or not yet?
No, not yet.
So we hit 315, exactly what I wanted, even 317, and now is the question where they wanna go.
Well, I almost got stopped out. Now I'm at break even again.
For example, higher oil prices, which could boost spending in the Middle East.
Okay, Karen Corner in Paris, shifting focus now, and a story that is evolving. A story journalist Chang Lei has flown back to Melbourne after being released.
VIX it's not doing anything, it's at 16.88 and it's just standstill there, but the 5-minute changed to grey. 1 minute are green.
That green strict candle almost took me out of my short. I was about to exit, but I waited a little to see if it would stay green. Yeah, looks like, yeah, it was a good entry at your exact spot, 315. Oh, we were hit 317. Wow. My stop was 318.75. It was a point away from my stop. Yeah, looks like we're going lower.
I wanna now the session view up will tell us what we hit the area, and as you can see we're playing from the view up extension to the view up extension, but mostly we're staying above the session view up then going lower, and if we cannot go below the session view up that would be nice. Daily FIP we can go to 332. This will be making a sense if we're going from FIP to FIP. If not, then yeah, coming back to the 50%. What's the point of them to going there and coming back? Grab liquidity from that candle, that's one thing. Yeah, exactly. This is where the bear is sitting and a boost don't wanna allow them to gain this area.
Yeah, I'll exit at 10 points, or do you think I should hold it for a little longer?
No, just trail it down.
You think I should trail it? You think it can go lower?
Definitely, we can go up to 95. Or if this was like I marked my area earlier on, if this was the top, then yeah, we're going much lower. So it will be only up to you how you wanna deal with that. Because 15-minute WMA, it wasn't tested today yet.
I think I'll take it off for like 15 points.
That's a good as well, because at least you know that, you see what I told you, the dollar, huge drop, and then...
Yeah. Found support.
And VIX as well, and VIX start to print the trailing stop. So your entry was freaking amazing probably. Just keep it there. Shame that I didn't trade my plan. On a POC now. We got prove it and disprove it, got the sense. What's the rank? The rank is only 20 points so far. That's ridiculous.
Particularly the treasury markets, and bringing Eddie van der Vol joining us from our live team. So Eddie, quite sharp moves there in terms of yields, most specifically, or most prominently I should say, towards the back end, the 10-year yields moving lower, 8 basis points.
Everything changed. Dollar, YM, German, DAX 40.
Geopolitics, which we constantly see that in the background at the moment. At the same time, there's somewhat of a certainly to the Fed's argument, saying that if we see long-dated yields high, maybe we don't have to hike so much. But if we don't hike that much, maybe we don't see the yields on the back end that high. So this, I think some markets are testing the circularity in the Fed. But at the same time, there is definitely we've seen over the last couple of days the yen, the gold, and of course treasuries wanting to go there.
I'll be back in a sec. Oh shit! Oh shit! We hit value area high, and it's holding. I'm going against you. I open long.
Yeah, I'm closing it soon. So
I open long too late. My entry is supposed to be at 93. Exactly.
all right, I'm out for $300, 15 points.
Nice. Where are you going? It was such a nice spot and everything. Ooh la la. Okay, I leave you like that. I'll be back in a minute.
Traders will trade PDI as if it is CPI, and therefore I think there's going to be a lot of action around that, and markets will obviously go very big on the coverage for that.
Well, about 5 minutes, how much focus will there be? So Anna Wong and Anna here was pointing this out from Bloomberg Economics, pointing out arguably the Fed minutes are more important this time.
But the Fed minutes are important. We want to kind of see whether the comments from Bailey and Jefferson and Logan is backed up by the rest of the crew at the Fed. Whether the rest of the council says yes, long-end yields will help us tighten monetary conditions, and therefore we don't have to act so much. But at the same time, you've got to wonder whether those minutes are not now a little bit out of date, because we have had a lot of dovish commentary come through.
Right, yeah, well, they're thinking those dovish thoughts at the time of the minutes, and now with that found up against the dots, I suppose. Eddie, thank you very much. Thanks for joining us. Eddie van der Vol from our Marcus Live team, with a reminder of the top stories that Marcus are focused on this morning. And remember, you can get up-to-date analysis from Eddie and the rest of the Marcus Live team. And now I think that is the policy to use on the Bloomberg Terminal. There's more still to come. This is
Okay, this shit going lower.
No. But I'm not even gonna get mad that I closed it because I took $330. So
Yeah, that's nice. I think so. This is the stop loss before we will go higher. No, there is.
yeah, I'm looking to go long too, but I'm waiting a little bit.
There is really this area. It's such a nice support.
Yeah, I'm able to withdraw like another 500 now again.
Ooh la la.
Yes. That's I was getting like paid like 19 an hour for forklift.
Yeah.
My 2 week paycheck was $1,200. Like, tell me how you can live off that. It's you can't.
Yeah.
Like $1,200 in 2 weeks, working 40 hours a week. I worked more actually. I worked overtime, so I probably worked like 45 hours a week. It was fucking terrible. Yeah, looks like that was a run on buy stops. Now we're gonna go higher. Yeah.
If we can pass the 50% channel.
My entry short was perfect though.
Yep.
I might go long here actually. Let's see, 1292.
POC goes there.
No, I'm waiting a little. No, I don't like how it's moving right now. Yeah.
I'm alone on ES.
Nice. What I like to do with this take profit account, since I have the smallest account size,
grow it up.
Is I like to scalp with the minis, and then I'll trend trade New York.
Yeah.
So since the daily loss limit's only $500, like yesterday I made 1,000 in London with you. So I was able to risk more in New York. So I was able to risk 2 minis on that short for 80 points.
Yeah. What the heck?
Which is nice.
Dollar going crazy up and down.
Really?
It's up, but I wanna see what it
Let me
go.
see.
But dollar got like a big candles.
Oh yeah. Had a big drop though. What the fuck? Oh, I was gonna ask you because I was looking at lumber futures, trying to like do like market analysis for that one company that I work for, and it has like all these giant gaps in the fucking candles, and I was like, what the hell? Like, how do you even?
There are
like, how
there
is
are
that?
technical gaps. It's not the gaps which are created like on the future markets. There are different gaps on Lambert, on wheat, and on this kind of the crops. They name them as the technical gaps.
But what is it? Why do they have it?
It's taking much longer to fill them because of the certain things happening in economy. The gap is created.
But there's less liquidity in the commodities, right?
Yes. Okay, so I will show you something. You see my screen?
Yeah.
If you wanna check the lumber, this is a nice thing to see. What's the lumber locks? Okay. How it's correlating with what? This is Lina Hawks live. Where is Lambert? What's a Lambert?
What do you mean? Like the ticker?
Yeah.
I think it's LBR.
Oh, come on, NQ, go.
Yeah, it's LBR for lumber.
Where you are then?
Have you traded commodities ever?
All the time. Commodities, it's gold, oil, platinum, silver.
Oh, gold. I guess oil. Well, have you traded like cattle or like corn,
No.
like corn or something like that, or no?
No. Okay, I will show
No.
you that. You can check it. I will send you that now. If
Right.
you can find the Lambert there, and then it will show you what's the volume happening today on a Lambert trades and the other bullshit like that.
Alright, thanks.
Yes, that was a nice entry on ES and then Q2.
Yeah. I didn't get in, but
so far, global economy has done remarkably well, given these multiple shocks we have seen over the past 4 years.
Lovely range, lovely range. Only that what I can say.
Than what we saw in the prior decade, give and take 0.5 to 0.6 percentage points. If you look at investment, the weakness is there.
VIX didn't accept previous 4-hour close.
That means real interest rates are positive. Just don't forget those rates were negative in the 2010s. And of course, when you look at trade numbers, they are really worried. Global trade is basically going through a trajectory, the weakest post-global recession recovery when you look at over the past 50 years. Global good trades is contracting, services are okay, but that's also coming down. All in all, the picture on the trade and investment side is really worrying.
Come on, NQ. I like that range.
To be underestimated, given how weak the investment numbers coming out in the emerging market and developing economies, and given that interest rates are going to be elevated going forward, then in line if you see the inflation coming down, real interest rates are going to be positive and going up. So the cost of borrowing is going to increase.
Where are you going?
In Africa region, the capital is close to zero. So all in all, we need economic growth, and that growth has to come from somewhere. If it is not coming from
That's a big rejection.
This has been one of the interesting questions that we've had, and the impact that whether they grow less than expected, the impact it has for the rest of the world.
12 points candle down. Bloody hell.
Forecasts for this year as well as next year, and we are really worried about recent developments in financial markets, especially during the past 2 years. The hope is that really all Chinese authorities
Bears showing the fight.
space to intervene, and if necessary aggressively, and so far they have been really careful how they approach the financial market problems in the property sector, but we are hoping that in the coming months they are going to be even more, aggressive in the interventions. China is very important, especially for commodity exporting economies, and given these geopolitical tensions materializing, in that space we might see even more volatility.
Are we entering a new phase of deglobalization also because of geopolitics?
When you look at the diversion of trade from China, when you look at how countries are trying to, in a sense, bring back the supply chain, and they are trying to be very careful how they
The VIX come to be red.
foreign direct investment, there is retrenchment. We don't want to say, outright deglobalization, but all of these are happening in an environment. We need more cooperation. We need more countries working together, given the global challenges. And recent inflation numbers in the context of Europe have been, quite well, I would say. And financial market gyration took place in the United States, but that had global implications in terms of raising the cost of borrowing. ECB obviously in a corner, mitigating the kind of inflation problem while trying to make sure there is no recession in Europe. The challenge is going to be during the next 6 months how the data is going to come and how the ECB is going to enhance position itself.
Do you worry about complacency from central banks, or do you worry that they're too aggressive at trying to deal with inflation and that it will naturally come down?
The big challenge was at the beginning, as economists, central
Bulls
banks
are tired, can they push it through or not?
But after that, they were very determined.
The pullback really nice, catch that short.
So far, so good in terms of messaging.
And it's red from the
in a sense, between all these risks, the desire to not to be very aggressive because of the impact on the economy, we are optimistic. Today, the likelihood of soft landing is higher than 10 months ago.
And what's the level of coordination that you're seeing among countries? It's always extremely interesting to kind of feel on the macro factors. Because you also
I just came back. Let's see what's up. It's just 307.
They're going to test now lows of the Sydney.
You think so?
Excuse me?
You think so?
I hope so, no.
I hope so, no. Are you still in the long?
Yeah.
Why didn't you just take the what? What were you up? You were up like 10, 15 points.
Yeah, but it was look so nice that when I go to the view up extension and come back to my entry now.
The way I'm playing it, I'm happy with 10, 15 points, and if it goes lower, 30, 40 points, cool. I don't care.
Yeah.
We know we're stuck in a range, so if we go down 30, 40 points, then I'll just look for longs, and I'll make money like that. I don't need to stress about holding a position. I'll just scout.
No, but you see what I was looking for as we was testing. You see this, we grab liquidity from the view up extension, we go higher. Now we go lower. So I was looking for price to come up at least to the extension. Test the view up only, and that's it.
Personally, I wouldn't trade this area at all.
For now it's okay. I want to see oil going higher. I don't care about that one too much because the risk on that is very small.
A cruise ship is much more than a flotilla of financials and numbers. Natalie Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet.
But they look like that they're starting to put the dollar higher.
Koltun.
Yeah.
How long were you trading before you found Adam?
About almost year and a half, something like that.
That's not that bad though.
No, it wasn't. I started quite late. Good for you. You are young and you start much earlier.
I started like at 16. You know that the AMC when it went up to $70.
Yeah.
I was in at $10 with $5,000.
Okay. That was a nice.
Yeah, and guess what? I was up $60,000 and I never sold.
Ooh, it come back to your end.
Yeah, well, I ended up selling for like $1,000 gain, and I've been since that day. I have regretted that shit for so long.
I had few of those as well. It's like I was trading options at some point at the beginning.
Oh, options? Yeah, me too. I was options trader.
And Tesla and Amazon, it was really amazing. There was like, I opened some longs on Tesla when there was a rally and I was 30k up on Tesla.
Holy shit.
Yeah, but by opening probably like $300 or $400 position. And
Really?
yeah, and
Oh.
but I cash out only 12K out of it. But still, it wasn't
That's
so
still
good.
not bad. That's what if you were up 30K, what percent is that? That has to be like
It was few thousand.
holy shit.
But you had this Tesla rallies like in a COVID time when they was really going only up, and that's it.
Only up, yeah. And everyone was trying to short it though. That's the thing.
Yeah.
I talked to my dad about it all the time, like Tesla, and he's like, it's so overvalued. I don't understand how people can trade this. I don't know how it's so up. It's so overvalued. I'm like, it doesn't matter.
It's not a car
It's
company.
overvalued.
Everybody thinking that treating this as a car company. It's not a car company. It's a tech company.
It's a tech company. Yeah, exactly. But I've heard so many people like that say about Tesla. They're like, it's so overvalued. I'm like, dude, it doesn't matter if it's overvalued or not.
If they're going higher, they're going higher.
Yeah, I mean,
I think
the same thing with.
Most of the people lost money on shorting Tesla.
Really?
Yeah.
I mean, I can believe it. I can believe that. Actually.
There was huge hedging companies which they was trying to short Tesla on a rally and.
Yeah, I bet they got freaking screwed.
Yeah. And the best thing was like when I was when I saw it that Tesla is doing the split of the shares. This was the nicest time to actually go and buy it.
Yeah, wasn't that like a year ago or was that like 2 years ago?
Yeah.
No, that was good. But it dropped heavy after that.
Where are you going, MQ?
We got 15-minute WMA for an entry.
And previous day close.
At 280?
Ooh, I hope so we are going to previous day close.
I'm so glad I'm not trading in options anymore though with like I mean you can make a lot of money, but I've had a lot of time where the contract, like I would buy a call and it would go up, but I would get killed with the theta, I think.
Okay.
On the option.
Most of the time the way which I was trading options was on a platform like 500 plus, so it was slightly different than you trading the options on directly on a brokers. But yeah, that was okay.
Yeah. You can use Adam's levels and Adam's things for options also.
Yeah, then you know when to open the contrarian trade for the option.
Yeah. This is not a bad range to be honest. I kind of like it. I'm not gonna. Yeah, 15-minute WMA. The 15-minute WMA is so good for entries. This 10 points up.
Yep. First TP is done.
Nice. You took the long?
On RTY.
Oh, okay.
I think we are sort of at the peak in rates. I'm sort of more in the kind of plateau camp rather than this kind of idea of a peak. I would say things are less likely to break famous last week.
I'm still in my long on NQ, but I'm in a drawdown. $80.
Not bad.
No, it was 120, so
And so I think the chances of breakage
it wasn't as good.
probably
Time for you to go higher.
in past tightening cycles. I think that we've seen small regional banks in the US, but those are interesting.
I wouldn't play any breakouts, to be honest. I know you want to see the 380. I doubt. I think maybe if you're right about the 380, I think we will do it later. I think we will do it like right before
The news.
New York. Yeah, exactly. I think we will pump up before the news, like an hour maybe before. I doubt we will move before the news right now, though. But I could still see 380, but later in this London session. Not yet. Look like it's just gonna be ranging up and down. Good for short, good for long.
So rather than concentrating your portfolio in a kind of recession-oriented or significant slowdown-oriented move, I think you probably still might have some risk rather than be sort of tender periods of doom and gloom view despite everything that's going on.
Yep, that's all they're waiting for. Shit, the gold is going, so actually it will hit my original TP now.
So doing the right thing in my opinion, which is to ease but not to ease excessively and not just try to stop.
I would have gotten like 30 points with that short, Koltun.
I know.
So I would say, China for choice of
That's crazy.
Yeah. Come on, RTY, you've got to prove it.
It seems to be, we get in an environment where people have been, contrary to theory of finance, right, really concentrating in the US, concentrating in duration, concentrating in technology. That's what we've all been doing for the last decade or so. I think now it's time to spread the wings a bit. So what's looking for treasuries? I think treasuries will probably, in my mind, we probably see the peak in yields, maybe there's a bit more to come because of resilience. I don't think I would, position myself to accept.
See, I don't like to add to my losing position. This is why when NQ was on a minus, instead of adding to NQ, I opened the contract on different DC.
More CapEx, physical, the transition to geopolitics, security, quality, all these things, really have a much more active sort of economy and state. So I think, yes, yields have peaked. I wouldn't expect massive collapse in the yields.
I think so much as well as that's the global markets countries that investor are coming up and come from of course from America, including the IMF, have dropping off, and the South African Reserve Bank. It's about coming up. They're coming up.
London, can you go somewhere? I will appreciate you go up.
Conversations that allow for deep discussions and important insights. How has that shaped your strategies in life? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a good question.
What's happening about that?
Every weekday at 9 a.m. only on Bloomberg.
Okay, so value area is no building at all. It's as it is. PLC is at the same level.
We are the only culture
And tomorrow is oil and gas. That's good.
This amazingly curvy hair that can be shaped into a variety of different places.
I want Black people to wear those shirts for how they naturally appear, and also to appreciate the cultural practice and self-employment that my ancestors have practiced for centuries.
So when ES killed the trailing stop, they opened a new trailing stop for the ES. Bears. That's interesting. Should I close my longs for now? Yeah, it's still green.
meetings and looking at life pictures of Janet Yellen, actually speaking at university not too far from where we are in the center of Marrakesh, taking a lot of reporter questions. I believe actually that's even our own Washington correspondent asking Secretary Yellen a question. Now she's been speaking for about 10 to 15 minutes. Of course, a lot of the focus has been on the U.S. economy, on China, and on geopolitics. A lot of the focus, of course, on geopolitics and the struggle off of life in Israel and Gaza. So underlying all the economic forecasts is a question: how does the Israel-Hamas fighting add to geopolitical uncertainty? Now, in the last couple of minutes, Janet Yellen has said that nothing is off the table. They're not taking anything off the table on the Iranian sanctions. She was also asked a couple of questions on U.S. and the claims of the U.S. soft landing, not a sure thing, but it most likely come. Now, is there one person that we haven't heard from very much since he became PBOC governor, and he is here in Marrakesh at the IMF World Bank meeting. So that will be extremely interesting. And Janet Yellen also says that it's one of the first times that they will speak face-to-face, and I think we'll meet just in a couple of days. A couple of other things that we heard from Janet Yellen is her talking, of course, about Iran. She's still going back to Iran, saying that they have not in any way relaxed sanctions on Iranian oil. I have plenty more throughout the day here from the IMF World Bank meetings. I'm also looking forward to our conversation with Vika Vapanov. We'll talk markets. We'll only get what we could hear from the Fed minutes a little bit later on. But if you put everything in context, it's a very complex world that a lot of participants here, a lot of finance ministers and central bankers have to unpack. We'll be right back in this report.
We have introduced the Pan-African Payments and Settlement System to enable trade in local currency. If you consider the fact that the 42 currencies in Africa, sometimes you are 5-10 kilometers from the border, and if you want to trade with a person across the border, you have to buy a third currency, to enable trade. So we want to eliminate this by
So where are you going? Previous day close? That would be nice.
to enable payments for trade in Africa. Now, the question of a common currency, I believe, will come further down the line, because, as I mentioned a few minutes ago, there's massive challenges on macroeconomic convergence that you have to arrive across the 42 currencies. And goodness knows from the experience of the European Union that that's not an easy task. But in the interim, how do we address this challenge? And I believe that digitization, digital tools, present us with the opportunity.
Okay, I'm long. Yep, that was the entry.
President Biden speeds up military assistance to Israel. Turkish President Erdogan criticizes the U.S. for sending warships to the region as a combined death toll tops 2,000. Treasury yields dropped on some of the biggest margins this year on hopes of the Fed could be done raising interest rates and eliminating swaps. Undisciplined third quarter sales, more evidence that post-pandemic luxury food is actually good. Good morning, everyone, and welcome to the Pulse. I'm Francie Michael with special coverage from the IMF World Bank annual meetings in Marrakesh. Now, Lebanon's state-run NMA news agency says 2 missiles were fired from Lebanon towards Israel in the last hour. President Biden says the U.S. is speeding military assistance to Israel following Hamas's surprise assault. Meanwhile, the U.S. National Security Council spokesman John Kirby says that there's no evidence to show direct involvement by Iran in the attacks over the weekend.
We have not lessened any of the sanctions. In fact, we've added additional sanctions, some 400 sanctions on just since the beginning of this administration. And we're absolutely committed to full and total enforcement. Now, obviously, other nations have to enforce their sanctions as well, and certainly we talk with them about that. But the United States has not backed off on any sanctions. Quite the contrary, we've added and increased our enforcement capability.
Now let's pivot to the outlook for the world economy. The International Monetary Fund has lifted its global inflation forecast for next year and called for central banks to keep policy tight until price pressures ease. We'll join us now as Peter Kaufman, the IMF's first deputy managing director. Thank you for joining us. There's a lot going on, especially geopolitics, that really have taken everyone and shocked the world on both sides. What do these mean for the world economy or for countries in the region that can be particularly vulnerable?
Firstly, President Germany is always kind of saying it's a terrible human tragedy what's happening in Israel-Gaza conflict, and we really hope there's a quick, peaceful resolution to this. In terms of the economic implications, it's a little early because we have to see how this conflict unfolds, whether it draws in other countries. What we know, for instance, is that if it turns into a wider conflict, say, and that causes oil prices to go up, that does have an effect on the economies. When you look at the numbers, suppose oil prices say went up by around 10%, then about 12 months later you see inflation going up by around 0.4 percentage points. Global output is lower by 0.15 percentage points. So it can have these kinds of effects, but again, it's too early to tell exactly what's going to happen. But we still very early stages at this point.
Are there any countries that you see as particularly vulnerable if it escalates? So you're talking about maybe Egypt or others that you're monitoring closely than others?
A countries in the region, like you said, are going to be more directly affected than the others. But if you look at what happens in terms of the effect on energy prices, that can become very widespread. And that's usually one of the big channels through which we see that affecting growing numbers.
Do you think there's complacency amongst individuals in general about what kind of quality economic growth they have?
It depends on the country. We see all kinds of countries in different places. In terms of our forecast, for instance, we have the U.S. doing well in terms of resilience. Euro area, some countries in there, we've had downgrades. China, we've had downgrades. India, we've had an upgrade. So it's varying in different parts of the world. I think it's important for all governments to realize that we are in an environment, high debt, record high debt, very high interest rates that are going to stay high for a while. And therefore it's very important to prioritize your spending, make sure that your revenues are keeping up with your spending needs, because it's not going to be that cheap to be able to finance just through debt.
There's a lot of, I guess, market steps. The central banks are always, one and done, if not done yet. And it was interesting in your economic outlook, it said, had to make sure that inflation is under control. Is the biggest risk to the global economy, that the central banks think they've won the battle before it's actually over.
The central banks have done a good job in terms of raising rates sufficiently to be able to bring inflation down. So the question is not so much about whether they need to raise rates. More in many countries, the question is about staying tight for a long time. It's going to take time. It's not going to happen overnight to bring the inflation back to target. So while there's been good progress made on inflation, the job is not done. And therefore we are emphasizing that it's important for central banks to keep their eye on the data, calibrate appropriately.
Come on, go. That was really nice entry, 75.
Financial conditions, of course, do you look at the cost of credit and financial conditions, or do you have preferred indicators?
We look at many indicators. So we look at credit growth, we look at risk spreads, we look at different forms of pricing risk. What has been interesting is that despite this very sharp increase in interest rates that we've seen, we haven't seen major risk-off events around the world, especially if you look at spillovers to large emerging markets. That has not been the case. I think they also deserve credit for having developed stronger policy toolkits over the last couple of decades. So financial conditions have tightened. We saw some disorderly action back in March. Things are better now. But with interest rates at the levels that they are now, again, we can't complacency. We have to make sure supervision and regulation is up to speed.
There's a lot of concern actually about emerging markets and some of the global debt levels that we're seeing. Is there any action that they can do now to make sure that it gets better before it gets even worse?
Yes, it's absolutely critical for you to sit down and say, well, these are the kinds of expenditures we need to prioritize. And these are the kinds of revenues we need to make sure we get. Expenditures that pay for themselves are the best, which means we invest in education, in health, physical public infrastructure, that help also with the green transition. These things generate revenues that help you pay for it, and you don't have to rely on very costly borrowing. But there are countries that will require debt restructuring. We see low-income countries who need to go through debt restructuring, and it's important to do that in a timely manner. We're making progress. The global architecture is making progress in getting these restructurings done. But still, it's not exactly where it should be. And that's one of the big aims of this week, is to be able to have a more efficient global restructuring process, debt restructuring process.
And there's an roundtable actually on global debt restructuring. What do you conclude expecting from that?
Yes, so IMF, the World Bank, and the G20 presidency came up with the Global Sovereign Debt Roundtable. What the novelty of it is that we brought together Paris Club creditors and the official creditors of China, India, Saudi Arabia, private sector creditors, and the debtor countries around the table to discuss about how can we deal with technical issues that seem to slow the process of debt restructuring. I think we're building trust. We're coming to a better understanding of how we can do comparability of treatment. There is technical detail, but this looks like things done quite a bit. We were able to announce that we're making progress on several fronts, and this is important because it really complements the common framework, the G20 common framework. This is really not the creditor committees. And this helps them end up with a more efficient
Half an hour, 40 minutes.
This is not a global coordination, but it's to align all of these regulatory conflicting forces, right? There's clearly a need for us to come together on debt.
Seems like someone's having a rough.
You in anything, Colton?
Yeah, longer than Q, 75.
Nice.
At the same time, we are in a geopolitical environment where there are disagreements.
Long on YM 392 and ES 39.5. So
Nice.
and I love that pump just now. Ooh la la, YM is going towards the target. This was the really, you can see where the bull is sitting. To whole night we couldn't break that level.
I mean, you can just tell by looking at the 4-hour volatility, we're just buying in the cheap box and selling in the expensive.
Yeah.
There's really nothing else you even need to look at right now for today. It's just sell the expensive, buy the bottom.
I would like to see the value area to build up, because it's really, as you can see, there is very small value area.
Yeah.
Value area is only 15 points. What the heck? Okay, session view up. What do you do now? Dollar start the bearish trailing. Only VIX, if you can drop that, will be amazing. No, I just got big in the stamina, it's very nice actually. I didn't have a knee, I much like that. Go to 380 now, just don't range, go to my level. Maybe not 380.
380 Koltun.
Not 380, but if we can come to 350, that would be nice.
I highly doubt that we go to 350 right now.
Okay. Give them the chance and you will see what they will do.
Are you saying give bulls the chance?
Yeah.
There are no bulls, there are no bears. Hold it, watch.
They're algo
Why?
it's algo trades, I know, I can see that.
Oh, what the fuck did I just do? Alright, I need to get my heat map back, because this shit's so annoying without it. I love that heat map.
Yeah.
Fucking trading view, fucking scammers.
They doing, just wait few weeks, they doing, what's the name of it? They doing shortly the sale.
Yeah, the 70% one, right? Or
Yeah,
is it like
70% one, yeah. I need to check when I need to renew my one actually. But I think I've got...
Do you have monthly or annually?
No, yearly, but I've got like few months left. Sorry, maybe even half a year left, or a year, because always I was buying. Where is you are? My subscription. Where is this? Products. Where again?
I gotta switch over to the annual plan. It's so much
Yeah, I
better
got
than the
annual
monthly.
plan, and I bought it so much on one of the sales that I got it upfront for quite long, and I cannot find it where it is, where it's showing where it's when it's running around. Profile account billings. Okay. Profile. Oh, September next year I got it. Where you can see that?
Oh.
Where? Here. 24, one more year. Okay, that's good.
One more year before it renews?
Yeah. It was good taking advantage of the sales.
Yeah.
Probably as well now will be 70% sales, so I will do the same. Come on, Uncle, go higher. Don't tease us here. Dollar is dropping. VIX was dropping, but they changed mind. WMA is in order for long. VIX can go lower. Just kill the trailing stop for the bulls and everything will be in as should be. Yeah, but we can. The value area high, you see, didn't accept us to build orders now. The oil killed the box and it's going higher.
I might just be done trading until New York, to be honest. I like that 300 profit. I mean, I can withdraw like 450, so it's good for a day.
Yeah.
Wait, I gotta check though. Actually, I can't. Today will not even be a good day to trade on my take profit account because I'm pretty sure they restrict FOMC minutes and PPI.
Yes.
So
you need to close minute before and you can open minute after.
Yeah. But I don't understand with the FOMC minutes because FOMC minutes I don't get that goes on for a while, so I don't.
But
I don't
it's only 1 minute
them.
before they release it, yeah. So they're releasing it at.
Yeah, it's 1 minute before and 1 minute after.
So the timing for you will be your time, 8 p.m.
Oh wait, I can trade PPI. I can be in a position. All pro accounts must be out of all positions. Have no open orders 1 minute before, during, and after the news events that follows. FOMC, NFP, and CPI. They say nothing about PPI. Actually,
so
I can be in a position before
you can
PPI.
do PPI. Yeah.
That's nice. Actually, I might. Tempting. No, you saw what happened with NFP.
Yeah.
I got 150 points. That day I was up like it was like 300, 400 points on the day. It was fucking crazy. Though I don't think like NFP I think moves the market a lot more than PPI does. I don't think PPI usually doesn't affect that much, I don't think.
Yeah. Okay, I closing YM on 200 profit.
Nice.
Yeah, that's okay. The gold is still going higher. It hit my original TP and just crawling and crawling a bit higher. But the gold suffered last few days.
Shouldn't oil be going up because of the war? That's what I heard.
It should be, and this is why we
Yeah.
put the drop now to grab the liquidity and take the stop loss. And actually didn't drop below yesterday close, so that's nice. And I'm in long on oil, but I am on minus.
Holy shit.
No, but I will need to. But firstly, I'm waiting for because I don't have it. Yeah, the new one. I will be receiving it probably on Monday or something. I don't. Because he asked for TPT.
Hey, look who finally joined the party.
Next week they'll be giving all of that.
Your party, right?
Our party.
Your party. You giving out drinks are on you.
I'm giving out candy for you.
Wait, I have to show Koltun something.
What, you sending something to me?
Yes, what I did with my time instead of watching this crap.
Tell me that you done what I asked you for. That you managed.
Ah, yes.
That would be amazing.
Yes.
Okay, I will close out RTY on plus $100. And I load the ES, but I think so. It'll be time to close everything and become flat. Oh, actually, ES got the nicest entry.
Don't tell me you closed the line on NQ yet.
No.
Looks like we're going high.
No.
Nice. Keep it. Looks good. But we need to get above this 303.
Looks good and not. It's really like...
Yeah, it looks good and no. That's kind of how I feel.
No, I'm getting flat now. I will keep only oil open. I flat all of the indices, only oil is open.
What was that, like 30 points though on NQ? Almost.
75. Whoa, exactly 29 points. If I will wait till now, it will be 30.
1 mini?
Yeah.
Nice.
But
good.
I had
That's
the same.
good...
You see, I had the same trade on ES. But okay.
You know what would be really annoying if we came up to 380 now?
Okay.
That is very unlikely to happen.
Ooh la la.
That's what I said.
I
That's
like
what
it.
No, he said 380. I said no way.
MQ, now you wanna go higher? That's okay.
I said we're just gonna range until PPI.
No, 350, not 380. 380 is too much. 350 is okay. I show you on a heat map, on a volume profile. 350 is okay. This year that look good.
350 is a stretch.
Very, very tasty. I like that as well. We making in Poland very often.
Oh yeah, that is amazing.
But tell me that you mixed beef and pork meat there.
Of course.
Yes, because I heard some people just put the beef. It's too dry then.
Beef is too dry, of course. You need some wet stuff. You need pork. You need some bread in it. You know.
I doing them slightly different way. You know what I doing? I chopping the top, putting them inside and putting the top on putting the top, so everything is melting inside. Just at the end, removing the top to grill it.
Yes, that works also. This one is I did for to save cost and then
Yeah, but you make me hungry now.
It's 10:53.
Wait,
what time it is in the UK? Is it 11:53 or 9?
No, it's 9:53.
Oh.
And I'm fasting, so most of the time my first meal is like 1 p.m.
Oh no, I can't. I'm not much of a breakfast person though either.
South Quiet, good morning. I am plus 18. 19, 12, 18.
You're up almost $2,000?
Yeah.
Fuck's sake. I got a long way to go then to catch up.
And I'm happy.
Don't think like that, otherwise you're gonna be minus 2,000 in a couple of hours.
I know. I'm thinking about just being done on the day on my TPT account because I can get another $400 withdrawal. So I'm like, why risk it? I guess.
What do you think about our short yesterday?
That 50-point candle made your day.
Yeah. And I had a 2 ES contract shot from there as well, but Sov done even better because I didn't want to add to my losing contracts and he added another contract to his losing contracts.
Yeah, I had 2 million.
Don't remind me because I had 10 micros going short exactly at the top.
At 80?
And you close it.
Why you close it?
And I closed it when it started to go up for the 3rd time. I said, no, this time bears cannot do anything for that. 2 candles later, it's like 50 points lower. I said, fuck.
Yeah, you should have been in the call with me and Koltun. I was shitting my pants like for 2 hours.
Yeah, it was stressful to hours.
Because I tell you why. Because first, I almost hit my stop loss, which was like $500 loss. That would have erased like a lot of my gains. And then we were just playing around my entry, and I had 2 minis for like 2 hours. We were just sitting there chopping, and I was about to close it, and I told Koltun you were about to close it too,
Yeah, a few
right?
times I was thinking to close, but then I was pissed off as well because I closed my YM on a $700 lost.
Oh yeah.
And it was top of YM. The candle even didn't go like 1 cent higher. I just closed it at the top of the top. And then this drop happened. I was
just watch the candle coloring. Candle coloring called it perfectly, so perfect.
Algo?
On the algo? The algo candles?
Yeah, I didn't watch it and I said, wow, I'm still kicking myself.
Adam didn't give me access to algo candles.
What did you do to upset him?
Nothing. I don't know why they didn't give me the access. Probably to do not mess up my head before I will stop testing the other signals, but I am very happy with the other signals. Oh shit, I will show you something yesterday. That was my entry short yesterday after the drop. You wouldn't believe. It was only demo trade because I didn't want to touch more. I didn't want to. Okay, motherfuckers, why you disappear? Something is reprinting.
Signals? Yes.
Maybe this was the other ticker. Oh shit, okay, I need to talk to Adam then. I had like 6-7 sell signals here.
Yeah, they're kind of reprinting a little bit.
Okay,
I don't want to tell Adam because he's gonna be so disappointed. But let me show
No,
you.
I need to tell him actually. I need to tell him because this is the first time when I found it. I didn't find it much earlier. I was just refreshing, checking on different screens, and I never found it till now.
Yeah.
Okay, so it looked like I closed my longs on the top.
Yeah, it was good close. Yeah, DC, I'm gonna be. I think I'm gonna be testing out the algo candles because I like them, but I will be using the contrarian mode.
Mm-hmm.
That looks promising, but I don't want to touch my setup
Yeah, there was
yet.
so many cells here. There was like on each candle was a cell.
Uh, was that New York? Yes. What?
Yeah,
What
New
the
York
fuck was
yesterday.
that?
That was New York yesterday. After the huge drop,
Mm,
we retrace a bit,
mm.
and I had like a cell after cell printed on each 1 minute candle.
Really? After the drop too?
Yeah.
We stayed. What was interesting is the strict candle stayed red the whole PM session.
Yeah.
Yeah, but we didn't do much.
No, we didn't. I'm glad I closed it. I closed my for like 80 or I think it was like 80 some points. I could have gotten 100, but why risk that?
You always go with 2 minutes and $500 risk.
No, he gonna
No,
with
I
1 minute.
usually no.
He's going with 5 minutes usually.
No, I usually do. If I do any minis, I just do 5 point stop loss. But I can't have that in New York. Like London, I'll do 1 or 2 minis for 5 point stop loss, and I can be fine. But
Yeah, that's a $200 loss if it goes against you.
Oh,
yeah, I know. Quite hefty.
I don't know why.
But DC, the reason why I entered is because I was up 1,500 before New York even opened, so I could give myself a little more space with the stop loss. I was just risking profits basically,
Okay,
which can be good or bad. When's the next 4 hour? Like, in an hour or so.
In an hour, yeah. Did you see what I sent you, Colton? That is the algo candles.
1 second. I'm just going to your. Ooh la la! No, but it catch that it show you that few times. One.
Yes, but once you're not even thinking short until you see a couple of red candles coming on, you know.
Ah, so you'll take the short where you've got your cross line, yeah? That area not at the top.
No, not at the top. No, but it's the top of where they couldn't make a new high. See,
yeah.
next weeks they couldn't go any higher than that area.
After the lower high.
Yeah, so that is where I got it.
Okay, that's nice. Did you manage to do anything to what we spoke about these lines, or it's a bit of the nonsense and taking too much time?
No, it doesn't take too much time. I just have to find a way to get, because that's swing, what you call it, the second one.
Yeah.
That one doesn't have all the buffers that I need for the change of direction, how to catch them, you know.
Okay.
So that is taking longer than I want to. There's a nice breakout trade long for about, you would be already 5 points up.
Yeah, it's been looking pretty bullish all London session, but we don't really have. I can't even really say that because there's no direction really.
Yeah, you cannot treat it as trending. You cannot like,
no.
Okay, I'm gonna wait for a pullback and then hop on the trend.
Then,
no.
Yeah, exactly. Yeah. That's why DC I'm scalping for like 10-15 points with a mini.
But you see, much better for me was really and safer, less pressure. It was buying the ESYM. It was much less emotional.
Why?
Because they're not moving as brutal as NQ. So I make easy $270 on. Actually, no, it was 300 in total on RTY and YM in 5 minutes.
Yeah.
And the risk was like $60 on them.
Wow. I don't understand, like, it feels like ES is just like, I don't really like trading it, but it seems like pretty easy to trade. I don't know.
When you care direction, when direction going your way. If direction not going your way, then it's not easy at all.
Are you talking about ES when it's choppy? It's hard to trade.
When you open the trade the wrong direction, then mentally you see it going slowly, but it's going against you.
Okay, I get what you.
Because it's going so slow, you don't want to close it, but then it's adding up and adding up to your loss.
Add it up. Yeah, I've actually had that happen with ES a couple times where I'm like, dude, this shit's going down so slow. I'm just gonna keep it, and then it just keeps going down slow and slow and slow. I get what you mean now.
DC there was short entry at 308 when we test the VWAP extension. Today we just trading from the bottom of the VWAP extension to the top of the VWAP extension. Value area is 15 points, didn't move at all.
Yeah, this is brutal.
There's nothing to move.
Yeah, but I liked it actually.
ATR is not bad. Sydney was like 1.5, so
yeah.
Okay, better to do something else.
1.5?
1.5, yes.
Were you moving the Asia market by yourself?
I was trying to, but that's all I could do. What do you want from me? Only, 2 minutes at a time?
Yeah, Asia looked brutal. Looking back on it. Yeah, oh my god, that's bad. They have 15 point range the whole Asia session. Maybe. Like 10 points. This is the same action that we had on Friday before NFP. We won't do anything until PPI releases. I doubt we even do much in PPI, honestly. I doubt there's even that big of a move. I think we'll just wait for FOMC minutes. I think that's what people are mostly waiting for. FOMC minutes and then CPI. I think CPI is probably the most important one, but FOMC minutes, if they say something bad, could be not good.
So for me, the shorts look really good. I wanna just retest that area, and I'm very happy. We hit the golden zone yesterday. Now the TP for us is 14,300.
14,300?
Yeah.
Holy shit! I thought you said 15. What the fuck? Another 1,000 points?
But if you remember well, my TP it's actually there, yeah, 14,250, 14,300. This is my original plan when I was looking, and after that I wanna see 13,360.
Are you gonna swing that then?
I need to see if we really staying here. So far it looked like yesterday we hit the... Yeah, we come back to the golden zone. And we rejected so nicely.
This is a tough area to be bullish or bearish on because we're in bullish territory, and we're not that far from all-time highs. I mean, seriously, like 700 points. but the lows on NQ also look like they could be taken out anytime.
I like the October. The moves are very nice. The swings are much bigger. So when we're ranging, we can make a nice money.
Yeah, ranging days are really nice for
It's
100
autumn
points.
season.
So this is what I like to as well check on the when you will go on this. You click on the ticker, then it's showing you volume trade every day. You can see how we're doing. So far today it's not a lot of volume.
So far.
Yeah, yesterday.
Did you say not a lot of volume?
Yeah, but listen, yesterday the volume was even lower than day previous till the drop happened. And when the drop happened, the volume just grew up. And yesterday was triple distribution day because POC moved from the bottom to the top and finished in the middle.
Well, you could tell when the big boy stepped in yesterday. It was on that 50-point candle. They were just building. They were building orders, like you said, that whole time when we were from 70 down to 60, blah blah blah, for like an hour, 2 hours. I don't even know how long that was.
Yeah. So the best thing is the POC most of the day was here at 20 area. Then towards just before the drop happened, POC moved to 15,370.
Yes.
And then it finished here in the middle. It was such a nice.
What about the volume on the move up? There wasn't much, I'm guessing.
No,
like
the POC stood at the bottom. Didn't go anywhere. This was the best thing, that POC stood at the bottom. I was like, what the fuck? It moved so much and we didn't go anywhere with it.
That was retail just buying and buying and buying and buying.
Crazy. Yeah, it was.
And then they told
I'm mad though.
Buying season finish.
I'm mad though because I was in that long at 240, almost it was literally the pullback before we went 140 points, and I exit for 20 points. Well, just because I had a mini, so more emotional attachment, but
I closed so many long exits at that time. This was as well so annoying.
Yeah, I understand that. I fucking could have gotten 100 points each way, but. For me, that's the hardest. The hardest moves to trade for me is those low volume moves where we're either trending down with low volume or trending up. I can't because it's so slow, and then I just mentally it's something different. Does something different to me with those moves.
Yes, you wanna do something or you'll be really just teasing us here.
70. Almost 40 points from that low.
I know.
It's not bad, to be honest. Could be worse.
Could be Sydney, yeah.
Did you say Sydney?
Could be Sydney, yeah.
Yeah.
But POC didn't move whole day. I mean, it was lower, but in the first hours of Sydney. After that, it just moved.
DC, but from my point of view, where the POC will move, we've got 15 points value area.
Yes.
That's ridiculous.
Yeah.
VWAP is green all the time. So we are 92 of
Yes,
the buy on
yes,
everywhere.
but it's also very flat all the time.
Mm. Come on oil, this is what I'm waiting for. I keep adding on each drop the contract.
The oil.
Yeah.
I'm bullish on oil. I'm really bullish on oil, especially with the
Stop it.
war.
Then have a look for
Stop
the
it.
drop today. I am minus 600 on oil.
Today?
And I've got 3 contracts now. But have a look what happened to oil.
Alright, I'll look right now. I'm bullish. I'm bullish on oil because of the war.
Now I am in profit. After this move, this last candle, I put me in a profit because I had 1 contract at
Holy
the bottom.
shit! What
Yes.
the fuck? What just happened? Right when I logged into that. What the hell?
Yeah, now I am in profit 300.
But look at that drop though.
I know.
That's a nice drop.
This was for me. It was stop loss hunt for the lot of longs open from yesterday.
I bet a lot of people are thinking the same thing though. Oh, war, oil, blah blah blah. Bullish on oil because of the war, all that shit.
Just go higher. I wanna close the first contract, but which was very shit open. But I need to go 86.15, and then I will keep the other 2.
I mean, that's good for NQ to drop if we're low on oil right now.
Yeah.
Let's look at the VIX. Let's see where VIX is. Yeah, VIX isn't doing much, really. Oh, it's been doing nothing.
The thing is, have a look on VIX. It's just we kill the trading stop and they start new trading stop for the bulls.
We're in cheap box though. No.
Yeah. But we are below 200. But they start in 1 minute. Okay, I will try to short NQ now.
Yeah. Looks good. Oil going up. Where's the dollar? Dollar, what? We're cheap on the dollar?
Yeah, it's quite cheap.
Quite cheap on the dollar. Oil's going up. Yeah, I mean, could get a couple points on the short for NQ. NQ would have been 308 again. God, it's just rejecting off 308. Look at how many times.
It's like 86.
There's the drop.
Yes, got a trailing stop from the top and from the bottom, but 3 minutes one from the bottom. From the top is only 1 minute.
I'm gonna try to hit my profit target on Apex on New York today.
How much left you have?
I have $600 left. I'm at like 2,000 something, and I need 2,600 for first withdrawal. But I'm kind of annoyed that they put a cap on the amounts, like $1,000 max for me. Since I have the static, so it's like there's no reason for me to like trade more. I only have 5 minimum days right now, and I need 10. So it's like I think I'll just get to like profit target, maybe get up $3,000, and then just trade micros. Just to ensure that I don't lose the fucking account before a payout, because that's happened before a lot of times.
Yep.
But Apex is ass, I'm not gonna lie.
They're giving cheap accounts because mentally they're giving you cheap accounts and you don't care about them.
No, but I mean, yeah, but the rules on the funded account are terrible too. Yeah. But DC, me and Colton were talking about that the 30% consistency rule. That I don't actually mind that too much because it can help you stop trading for the day.
When you hit your goals, you go walking away and you're enjoying the rest of the day.
Yeah, yeah.
Go.
This is fucking brutal to watch. Playing in like a 14-point range for the 13-point range, like 45, like past 30 minutes. Ooh, now I'm tempted for some shorts up here. Come on, let's go a little higher. I'll get in short.
Don't go higher. It's okay from here. Actually, you can go 10. Minus 40 bucks. Minus 30. I think so. I'll be closing it on a small minus.
Is your entry at 300?
301.
It's not too bad.
This is Israel's 9/11. This is Israel's 9/11. And Israel will do everything to bring our sons and daughters back home.
Israel's ambassador to the UN, Judith Aragon, speaking on Sunday, joining Danny and I now.
Okay. Now 40 bucks in profit.
Nice.
Just go lower. Otherwise, I will take 40 and I will be happy with it. 60.
Line from the UN ambassador. This is Israel's 9/11 moment. You've worn many different caps in Israel. You are in Jerusalem now. How would you define this 9/11 moment for Israel from your perspective? Good morning.
I think currently really there is a state of shock and terrible sorrow about the horrors that we see on television, the massacre that took
The
place
candles
in
look good for the
Israel.
shorts.
And there is a great concern about what's coming. There is a great uncertainty about the unfolding of the war. I would say that the only silver lining is seeing Israel is really mobilized and coming together, volunteering on every front, including to reserve duty. So this is really the state of right now, and great uncertainty.
And minus 10.
Yes, I mean, we have to in these moments look to...
Alright, I'm gonna go eat. I'll join back after. This looks like a complete shit show anyway, so.
Okay, I will stay for like 10 more minutes and then probably I'll be going to do some shopping, make the lunch.
Alright.
I'll be still here
Alright,
for at least 10
DP,
minutes.
if you're still in, I'll be in like probably 30 minutes. If not, then I'll just see you guys all in New York.
Okay.
Yeah, I don't think Adam is gonna trade today.
Yeah,
Really?
because of
As a
the
loser.
He's not trading, usually he's not trading Monday, Tuesday as well, and I was surprised that he was trading yesterday.
But he's not gonna trade at all? Usually he trades FOMC, right?
Only,
Yeah.
He will trade, only FMOC, but not before.
Alright, I'll see you guys later.
See you later.
Okay, bye.
You see what you're looking for, a short, or are you more interested in a long?
Oh, I'm not doing anything here. We're in the middle.
On PLC.
Very close to the POC.
But from Israel's perspective, how much risk is there now to the economy?
But the line
How much risk
changed
is there
red.
to the output?
That's good.
Well, if we look back at previous
200
It is slightly bullish, everything is bullish, but we're not moving anywhere, so.
it had recovered very, I would say, rapidly.
Yeah, the best idea will be I will just stay till half past and close everything, walk away, come back when the session is decent to trade.
Would be and how broad it will be. So we will see definitely
I'm just annoyed about the oil.
First of all, tourism, private consumption, investment.
I need to think when to cut it off.
So, if we look back at the second Lebanon war, there was a very sharp decline in the last quarter of 2006, but then a stronger recovery by the next quarter. But it's very hard to say, whether what we're going to go through
The gold.
of the same order.
Yeah, gold was very nice rally and I took most of it. I took 800 out of 1100 was the top for the gold for now. So that was really nice trade.
That was good.
We have seen, of course, the shekel was somewhat stabilized from the action of the central bank, but there were kind of default swaps which spiked. Last year with Bloomberg, he spoke to me and he warned about the credit rating with the judiciary upheaval. Is the credit rating now even severely under threat?
I'm going in 6 minutes.
It's very hard to say because on the one hand I think my guess is that the judicial reform is off the table now, so in that sense that risk is over. And obviously the geopolitical risk seems to have intensified, so it's very hard to say what will be the reaction of the credit rating agencies. I have to say though that our financial institutions have exhibited.
Yeah, so far they prove us that the Sydney is strong for buying. Each time we visit there, we got the buyers.
Yeah.
And I'm $5 plus, 15 minus, and I really want to close it, I think so. Yeah, I'm out $10 plus. It's just cover the cost of the contract.
To the short and to ensure the functioning of all markets. So in that sense, I think we are okay in terms of the financial markets and financial developments.
Professor, can you just pick up on that? The central bank obviously defended the currency. I think in their statement they said that they had sold as much as $30 billion. Now we don't have a final number. That's no small amount on the size of Israel, nearly $200 billion of reserve. My question to you is, you say that they acted well and held the defense of the currency. Do you think we're going to have to do considerably more intervention like that? Will the market test, if there's a full-scale ground invasion, if there is a serious escalation, as Hezbollah claims that they apply on Israel, if there's a major escalation, do you think that they will have to again in size?
When they said that they will sell up to $30 billion, that's a huge amount for the market, and I think that was enough to calm the market. And I'm sure, given the size of our reserves, I think that if there will be a necessity for more, they will do more. They said also that they're willing to inject liquidity for $15 billion. So I think it should be enough, and if there is more needed.
Now you're dropping.
We've seen that actually just the announcement was enough in order to calm
Can you see that?
the foreign exchange market.
Yeah.
Why?
Talk about the swap. $15 billion of swap mechanisms have been created, Professor. As was referred to Daniel Eisman, is that a reassurance in times of high crisis, swap lines are incredibly important. How much more detail do you want, or does the market need in terms of the Fed's participation in these swap lines, or what additional swap lines are available globally? Is that a psychological defense that can be posed to?
I think that it's not necessary for the moment. I think, as you mentioned, that there are $200 billion of reserves. It's a huge amount that can really be sufficient, and I think the market, again, the reaction of the market shows that just the announcement was enough to calm the market.
Don't want to touch it.
Earlier in the year, we did have those in the right-wing government that did assail the current Bank of Israel governor, Amir Yaron. His term comes to an end in December. How important is it in this moment of unknowingness, of war, of necessary stability that he stays on?
I very much hope he stays on. I think that would be the best demonstration that the government wants a strong and independent central bank. So I think that could be a very important step to demonstrate that.
There's also been discussion at the political level that
That's not nice. That's not nice.
is it for the country and for continuity, stability, confidence that a coalition government is formed? Is it something that you would vouch for, call for, support?
Yeah, I would have my 10 points.
Yay!
If I will be patient for like 2 more minutes. And we've got a cell signal and everything now.
Fair enough. Now, you did mention some of the concerns when it comes to the economic impact. Again, just when we're trying to understand the contours and the natures of it, there were concerns on FDI already previously to this. Again, concerns about what's happening with some of the government, some of the judiciary reforms. How crucial is that FDI conversation right now?
Well, I think it's hard to think about it right now. We're in the middle of a crisis, and I think that we will have to see how we come out of it. Again,
That's a nice cell. Yeah, and all of the candles are showing us the sign. I have the TP signal. But today you cannot trust any signals.
Very severe, but it's very hard to say
No.
that the past can teach us about what will happen now, given the uncertainty about the severity, the length, and the contours of this current war.
As you look at the landscape we're on day 5, there are escalations around further attacks. From an economic and from a monetary policy point of view, what is the biggest risk now?
I think looking at the financial stability, Israel, because of the strength of our institutions and our very active central bank, I think we're okay. I think there may be a longer-term damage to the economy. It will depend on the extent and the size and what happens in terms of the war, but also on the action of the government later on. I think in the moment it has to allocate all the necessary resources
10 points and nothing else.
and to finance the reconstruction and compensating people. And as soon as this is over, I think the question will be where we're going from there, but we're not yet at this stage asking these questions.
Professor Fleet, we know that this is a moment of hardship and heartbreak, and we really appreciate your time with us today. That's Carney Fleet, former governor of the Bank of Israel. Thank you so much. All right, as we take a step back from this, the concerns are indeed proving to be a haven bid into this market, but it does go further than that. We've had a lot of central bank policy comments from Daly, from Logan, of course, who's a hawk herself, saying that the market might have done some of the work for it. So you do see 10-year yields coming in about 8 basis points. Gold, that is surely proving to be a haven bid, up about 0.5% while Brent crude drops, Manus.
There's no doubt about it, that drop in the bond yields on the back of those new headlines with Hezbollah claims to have fired a missile into Israel from across the border in Lebanon. That brought the yields down. Does it bolster the end of the story? It's still very, very early to say. What we have got is, again, money flowing into U.S. breweries. And with that in mind, Dan, you've it is the yield drop that gives some sucker to the equity story. As far as Europe is concerned, we had one of the best days of 2023 yesterday, coming up 2%. We build on that. We're now up 3% in 2 days. Asia is on a 5-day winning streak, so you are just seeing a real momentum there. Europe building on yesterday is a tenth of 1%. LVMH is also very much in our sight line. France and Europe are 2-3% growth every year. I mean, wines and spirits dropped by 14% down. So the 2023 gains for LVMH have large gains.
Waiting for this oil really to go somewhere, and it's like going not the wrong direction.
2% of gross domestic products, that's what they expect them to be. That is also something that is weighing on the stock market.
Eating my profits from the
That was before this war. If you think about it, it was deficits and supply, and those are the two biggest
other trades.
Bullish call. I was wrong, but I was wrong for all the right reasons, all the way up to 4%, then 5%. So as it stands right now, Dan, it looks like these bonds are behaving as those hedges in times of sheer terror.
Right, well, let's head to Morocco now, where we got those warnings from the IMF meetings, and those meetings are ramping up against a backdrop, as you say, Maris, of escalating global conflict and debt distress. Treasury Secretary Janet Yellen spoke earlier on her outlook of the U.S. economy.
I'm not saying the soft landing is an absolutely sure thing, but I do continue to think it's the most likely path. But are there risks to this outcome? Of course there are, and global shocks are immune.
We now go live to the IMF meetings with Bloomberg's Francine Rockwell, where she's standing by.
Yeah, look, my goodness, saw such a shitty oil reaction.
I think South Texas is on to something. The 15 WMA is pretty...
Yeah, respecting.
Yeah, pretty respecting so far these days.
We was taking today morning the trades we saw from the 15 WMA.
With senseless act of violence, like terrorists, hearts go out to our people, it's the entire people, hopefully we're all safe right now, but that is our biggest, most important focus, and of course we're monitoring doing certain violence, but it's our people on the ground first and foremost.
Change actually the world economy as we see this potentially escalating?
Well, we certainly hope not. We're watching it closely, and of course it's already affected the oil prices and commodity prices. But I think we're all just going to have to see how much
Come on, oil, go higher.
over time. We are in the Iranian region and other places in the world, and so far it is pretty conjoined to where it will conflict this way. And that's certainly what we hope to do.
When you look at what we see over the price and structuring becomes the big changes that Citi is going through, where do you end up in that 2 years?
So this is something that Jim has been very thoughtful about and decisive since he was
Davis Enterprise.
Really laid out this vision for simplifying the bank. We've already gone on a path like that, but really much more simplified the bank to do, starting out with divestitures of our
Okay, the next pilot was there, we just make it off, not accepting expensive, just in a cheap area.
Spending a little bit of time transforming our risk and controls and the operations and technology supporting them, and really getting that underway. This is what I would describe as the third leg of that school.
Buy for me, not like looking for the sell for me, looking for the buy.
So, for example, by getting rid of and divesting all these non-U.S. consumer businesses, we don't need the same significant geographic managerial layers that otherwise we have. So it's getting rid of those. And likewise bringing the core businesses closer to them. So in 3 years, getting rid of the answer to your question. In a couple of years, I think legally it'll be a much simpler bank. Expenses will go down, our revenues will go up as a result of being simpler, and I think great investment in what we're doing in transformation this past weekend, starting next year.
Now, is there a little bit of a bump road? I mean, you've also, for example, sold a good chunk of China units to HSBC. Does that impact your ability to service clients in the shorter term?
In fact, it's a very smooth transition that we're going through. We've had come from 9 closings of non-U.S. consumer businesses. I'm pleased to say those have all gone very smoothly. We've gotten good premiums for the ones that have closed, and then in some other cases we've had to do regional wind downs of the business. China's one of them, but this marks the ability to smoothly sell a chunk of the business. So I'd say all of it's done very well, and our business that remains behind, which is our core institutional business that we have all over the world, that's operating very smoothly. This is not, in fact, it's making it easier.
With the changes in the structure, do you have a final number of job cuts?
No, we don't. I think one of the interesting things about Jen is she's quite decisive about the direction she wants to go, but she's also very specific about doing it in the right sequence. This is not about
Short on everything looking good.
It's about making sure we get the roles right to simplify the company, to get the most efficient business that we can get out of this. Those numbers will come over time, but they're going to be
Okay, I'll make my shopping list. Today I'm doing a duck breast.
Very nice.
the most significant thing with
Oven?
Pan and oven.
is a proposal to see
Oh, okay.
I rendering
First
a
in the
skin.
pan.
I rendering a skin on a pan.
that
Mm-hmm. Yes.
And then
Make it
oven.
crispy.
Yep.
events that happen, just regional events in March. We believe that it is
I think so will be with the plum sauce and mashed
not
potatoes.
only because it causes us
Nice.
to have but we believe we will
Yeah, because I got enough of the rice for now.
that U.S. companies can be genuine, which is not a good thing when the economy is in more or less a precarious position, even though remarkably resilient. And it also pushes more activity and blending in financial intermediation out of the banking system and into banks. And we don't think that's a good thing. We don't think it's a necessary thing. Our banks, the largest banks, including Cities, are very small from a size perspective in terms of capital levels, liquidity levels, and this is just
Okay, just do the plums only. Cut the rest of the stuff.
What is your retail relationships with regulators? Of course, given what's happening a couple of years ago with some of the consent orders.
I think we spend a lot of time trying to maintain a very constructive relationship with our regulators. And I think, I can't put words into their mouths, but I think they believe we are doing our utmost to comply with the rules and the consent orders that we're operating under. But ultimately, what they want to see and what we have to deliver are results, execution results. We believe.
You see, I started baking my breads. I'm not buying the bread for a good 2 months now.
Ooh, that's very nice. White bread, right? Normal bread.
Different one. I doing the white mixture, the rye bread sometimes. Then the best one for now, but I was preparing it for 24 hours. Was like mixture of the white and rye flour, and you proving it in a fridge. First time I was doing the bread when you proving it in a fridge.
Ah, slow proof. You have to leave it for like 12 hours.
24.
Ah, yeah.
And that was
That is a
so
lot of
tasty,
work.
so actually I will be getting more of that.
Yeah. Where'd you get the recipe?
I got a Thermomix, so there is like a cookie dough book.
Ah, okay.
Thermomix is like amazing machine.
Hmm.
So I wouldn't say there's anything extraordinary at the moment, but we of course are watching.
Thank you so much for your time today. That was, of course, leading the chair. I say with that, I'm going to send it back to you.
Okay.
in Europe, coming up with any
Just thinking, should I do the mashed potato or parsley? Actually, I can mix mashed potato and parsley.
What do the bomb moves mean for Anne Catherine? Is it a vulnerability or something more significant in the bomb policy?
Okay, this will be this recipe. And then maybe beef chow mein.
A cruise ship is much more than a flotilla of financials and numbers. Natalie Holt showed me around the celebrity beyond. Royal Caribbean's newest ship, rolling out nothing but
Yeah, I will be relaxing in the kitchen instead of watching this shit show.
an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform to have it with something and on board.
So functional.
Exactly, very functional. And then we looked at it and said, why don't we just make it a really cool featured spot where people can enjoy it?
Yep, I'm gonna go pretty soon because there's nothing to do here.
So far the YM is the strongest because they are at the previous high. ES is just after NQ below and RTY is the weakest. This is why fucking oil is not going anywhere, because oil got a lot of RTY inside. RTY got a lot of oil. RTY don't wanna go. Yeah, this is the level to step in and buy. Just move your ass. Ooh, that cell was a nice catch. 825 with printout, exactly.
This is Bloomberg Brief. I'm Jimmy Berger in London alongside Janice Kennedy in New York. Janice, I want to show you what the 10-year yield has done so far this week. Of course, we've only had 2 days of cash trading, but we have seen it decline 24 basis points from that peak on Friday. We had that hot jobs number followed by Douglas Schultz peak saying that the market had done some good work for them. And you can see recently over the past 2 hours, we did have this big drop in 10-year yields, about 9 basis
It's only
points.
time to
Again,
cut off the loss on oil.
in the war between Hamas and Israel circulating through this market. Let's try to make sense of it all. Joining us now is Anne Catherine Peterson, Senior Investment Strategist at BlackRock Investment Institute. And Catherine, you look at the 10-year today, again, a move lower of about 9 basis points. How do you dissect what from that trend is coming from just a behavior jerk versus an actual change in Fed discourse?
Yeah, I think the latest moves are really interesting, and it's important to dissect exactly what has happened because this year round the surge in bond yields, particularly following the summer months, has been driven much more by monetary policy expectations than by term premium. And we do think that generally the risk of holding long-term treasury bonds
Oh, you crazy?
for term premium to move higher given the uncertain fiscal policy outlook, also given the current uncertain outlook in the Middle East, which could trigger cost pressures, inflationary pressures, and also given the fact that the Fed so far has been engaging in quantitative tightening while U.S. issuance is high. But nevertheless, when we dissect these two factors, there is no room to run on the term premium front. However, when it comes to the monetary policy expectations,
the high for longer environment has been priced following the summer months. And here the Fed dovish comments come into play and could motivate investors to turn into the longer term bond market.
Hi, Catherine. Good morning. It's Manus in New York. It's interesting. You chimed with one of the most read stories, which is McCormick David City saying, even though time premium has gone above zero, it's only at the bottom of the range. So do you expect a much bigger move? How much bigger a move do you expect in time premium before you?
This year I will be doing triathlon next year.
Whoa! Are you preparing?
Yeah. I start now slowly with the running and swimming. I'm swimming in a lake. It's cold.
Oh man.
Now I'll be cycling shortly, but I want to do it next year, June. So I've got a lot of time to prepare. Okay, I try to short NQ now. Don't know if it's a good idea.
Calper says okay.
We got a 3 minutes trailing stop. Ooh la la, go. But more. Do like yes.
Is data dependent. We're going to get CPI this week. Is there a big risk, given positioning, given the volatility we've seen, that could upset the apple cart once again?
Yeah, so it is important to know that inflation has progressed this year. So some disinflation has been...
Scalper said okay, and then Q doing it like no.
Huh.
I don't give a fuck about your short.
Thank you for you. Huh.
At least oil doing something. Try to rescue itself. You zaraz, I'm doing the receipt and I'm going. Have you got that, Tamari? Okay, now we need to find Tamari.
Substitute. Always Google substitute.
Okay.
And I like that top line that you've got, which is hold on tight.
How many recipes? Because somehow it's almost the same, but it's
Two.
slightly different.
I don't know. Same that.
What is it that drives the sort of the next swing, the second line effect? Is it
Two portions. I don't know about the chow mein.
As well.
Do you want to double that now?
or is it higher and more enduring structural inflation, as Larry Fink said to Daniel a couple of weeks ago? It's embedded, and that's about wages, isn't it, and Patrick?
Yeah. Okay, I'll double it.
So in the shorter term, it's
Generally, I need to just get my steak. The rest is okay.
Mushrooms.
Yeah, but that always is a bigger.
You still on your call?
Yeah. What I want to ask you as well, do you need anything else? Because I get in flour. You the bread? What? Okay, got the milk. You want cheese as well?
Another one is the low carbon transition, which will again, on a longer term horizon, mean higher energy.
Yeah, and Q, just go lower.
Thank you so much for joining me this morning, and Catherine Peterson there from BlackRock. Now coming up, we're going to have a look at some of the market moving events to watch throughout the day, but first, let me show you what the markets are doing. S&P 500 futures continue to mark higher after yesterday gaining about 0.5%. The dollar slightly weakens. Again, it is that bid into the 10-year that's caught us all by surprise, down about 9 basis points off the back of heightened geopolitical tensions, the heightened war with fears of escalation, but strangely, crude coming down in that environment, $85 a barrel. This is Bloomberg.
zrobiłeś coś dzisiaj, czy już...
I trying this one.
Muszę zrobić dużą pracę.
It was same like this, which is no, I haven't.
And also that we have every company is getting clear direction from the president as well. So we got that too. So it's a coordination function. On the NEC
Okay, we have extension 310 and what we wanna do there.
Council of Economic Advisors, Treasury, but also Secretary of Labor, Secretary of Commerce. My team, the NEC team, is a small team within the White House that is, our job is to do that coordination across the range of economic policy. Now, you were the
That wasn't a very good idea to short it, looks like.
Tell me now. Well, the scalper is done, but we're still going up.
Yes, I need some red candles on the algo.
Okay, we got a new 4-hour forecaster in 7 minutes.
Yep. Now bulls are the most strong, should be making a new high.
Or it will be a very nice rejection.
Or yes.
Because we've got a lower high already.
Anyone looking at shorts?
I am in short.
Nice. 310?
No, I am 304. I enter too early. I enter with my tired bulls and got a bit of the drawdown.
They weren't tired.
They wasn't tired, yeah. And I suffer a bit of the drawdown.
I don't like that there's new 4-hour candle in 5 minutes now.
Actually, this is what I like it.
You like that? Really?
Yeah.
Yes, because it's gonna help him.
Why? Because it could go up also. So.
It shouldn't go up as we...
Shouldn't go up. Should go down first.
Yeah, we cannot do anything about the previous... we cannot leave the expensive area, so the new 4-hour, it will be the same. Can you see that we're trading between the cheap and expensive?
Yeah.
Only the close of the previous 4-hour will change, and a 50%.
There are still so many things you don't know, South.
Yeah, I know.
But probably I will close my shirt before that. Okay. My entry long was so amazing at the beginning.
Oh yeah, and the other entry at the 15 WMA with the 4-hour low with the view up extensions, that was spot on.
Okay, we've got the breakout. That was the entry short now.
At the top, yeah, when we made a new high?
No, at the top of the expensive area, 14,314. You can see how big divergence it is on a scalper. The last...
You still on the short code?
Yeah, I'm still on it.
Yeah, very big divergence on the scalper, yeah.
The drop should be really like 20-30 points. Come on, drop it.
And if you want to trade with a person across the border, you have to buy a third currency to enable trade. So we want to eliminate this
I was too slow, I should short the ES at the top.
To enable payments for trade in Africa. Now, the question of the common currency, I believe, will come further down the line because, as I mentioned a few minutes ago, there's
3 more minutes.
challenges on macroeconomic convergence that you have to ally across the 42 currencies. And goodness knows from the experience of the European Union that that's not an easy task. But in the interim, how do we
Ooh la la.
And I believe that digitization
Go back to my entry.
presents us with the opportunity.
I'm in short at 12.
One and a half minute. 280, we should come back. Dollar is the gold is dropping. Same as my freaking oil. Okay, new candle. Ooh, I am surprised with the size of it. On small it changed a lot. I don't know if you got auto or small.
I got auto, but it went up considerably.
On small as well. It's like I am surprised that happened this way. So the 350 which I was saying earlier, that's the target for the longs now.
Now it's possible.
When you see rates move at this speed and in this quantity, you always worry that something may fall off the bus.
I think the mindset and the thought process is finally shifting after years and years of low interest rates.
Everybody's worried about their ability to finance. We're not fully up to where we need to be to say we can accomplish.
This is Bloomberg Surveillance with Tom Keene, Jonathan Bell, and Lisa Horowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio. Alongside Lisa.
Yeah, it doesn't look good for the short.
Equity market positive by 0.2% on the S&P on a 3-day winning streak for the S&P 500. Lisa, if you want to focus on the data, the week starts today.
Yeah.
Bears went tired very quickly on the scalper.
Okay. Yeah, all of the VIX are green now. I would be surprised if they wouldn't be green.
Seems to be dampening the tone a little bit, basically saying maybe one more hike is needed, but softening the tone around the edges. It seems like everybody has been taken a bit off guard with the rise in the long-term yields. And so there is this question of how much does that do work for?
Koltun, you still in your short? Or you get stopped out?
No, I'm still in.
Wait a second. Our rate hike is back on this.
She's sounding very lonely. This can all change today. Peaking a little bit later as Lisa.
If we'll break that, I'll close it. I put like 15 points stop loss on it.
The bigger picture here is that basically it would make Exxon the big kahuna in the Permian Basin, which is the most productive shale area in the U.S. And basically this would allow them to act better as a swing producer. They could increase production more quickly and more agilely in response to shocks. I do wonder how much the timing of this, yes, is because they've got a lot of money and what else do they
I was thinking to add the second contract, but I don't want to add to my Losing trade.
I wouldn't. I wouldn't. Not here.
But for me, it's at least go to 98.
Alright, it's back to my entry at 312. Looks like it's holding above the 4 hour though, which I don't like. Looks pretty bullish to me.
Give it time. It is bullish. Candles wanted to strict candles wanted to turn on but turn off, so that's good for the bears.
Yeah.
Pullback is at the top, which is also good for the short. The bears are not stopping in, which is bad.
Okay, so we broke this area. The next will be 27 if we will go higher.
And I think that anyone who sees the images and sees the stories that are coming out and just says
There was a nice buy signal and I didn't check this chart.
has lost touch of their humanity. There is a question of what to do next and what the U.S.'s role and what the international role is at a time when everyone is concerned about this escalating in a way that becomes protracted and very difficult more broadly.
Our candle.
Again, bears are disappointingly absent.
Yeah.
Thinking about closing my short, but I want to give it a little more time.
This is what they're playing us now.
Yeah, that's why I'm keeping it. I'm just gonna be like, if it takes me out, it takes me out.
Your stop is bigger than 5 points though, huh?
Yeah, it's 10.
Ouch.
I want to give a little more room.
10, 1 minute, yeah, okay. That makes sense.
Just gives a little more room for the trade to play out, but I don't like it.
I am minus 10 now.
The data verify this, and this is sort of the true test. 8:30 a.m. you get September PPI, the precursors John was mentioning to CPI coming out tomorrow. Also ahead of that 1 p.m. auction, a $35 billion auction.
This is the price action we hate so. Slowly, gradually going one way.
Yeah, it's not doing anything but the surge is, if the surge is finished.
That will be nice.
Ooh, back to my entry. Nice. Contract at 3.
The surge. So the drop should happen. Finish the surge and isolator, yes, printing the short. Just this clan that need to close. Did you saw something like that? I've got 1 minute time here and it's showing me 1 minute 18 to close the candle. What the fuck, Trading View? What are you doing? Actually, on all of the charts I've got the same. This is 1 minute chart, and on the other screen I've got 1 minute chart, I've got different timing. No, okay, the same. No, this is 146 now. What the heck Trading View doing?
equities, certainly some unease about that positive view, but on balance, that's where you sit within the equity market. What do you like right now and why?
Prove it.
Well, I think based on, as I said, that marginal view on positive, on being positive equities, we're having to take something of a barbell approach. I mean, on the basis we think, there is sort of an economic slowdown, we do like US equities, and therefore they're considered sort of the higher quality equity market around the world within US equities. But that's sort of by proxy liking the sort of loosely defined technology sector. But I think we're going to have to barbell that, and we're going to be able to get something of a repeat of 2022. Inflationary pressures resurgent, not least driven by what's happening in commodity markets.
Surge went back to green after one candle, not good sign.
I don't have any search.
I mean the surge bar.
Ah. I think into closing, but as soon as I press close, it will drop.
It will drop.
So, same as I done last time. Just 10-point drop, and I was just looking at it.
You're closing the short, Koltun?
No, I didn't close it yet. I didn't. I'm thinking.
Don't close it yet. We below 4 hour and.
I know, and I've got a sell signal from the internals. Prove it.
Yeah.
But this will be retraced.
Yeah, I'm not saying it doesn't look good for bears, but I would just keep it because I think. Yeah.
It won't be a retracement, it will be just a pullback. The base case scenario will see 300, 302. So at least I will be break even.
What would make you trigger that kind of view? What would you have to see?
I can see 296.
Maybe things are too strong, especially
Okay, so it's 10 points for me then.
looking for, which is earnings that kick off on Friday.
Yeah, I mean, I think it's signs that
I should add it at the top, then I will be in a profit now and I will close it. Because I don't like
Yeah, I was thinking about that. I was thinking about that contract, but I didn't like it because the strict candles started to flick green, so I got a little scared.
Yeah.
Like always, every time those strict candles flick green, I just have a feeling that it's gonna be like a 10-point move and just take out my stop.
NQ is above the previous 4 hour, yes. NQ below, yes, above previous 4 hour. YM much higher.
Entry was 13.5 for me if I was wanting to take it.
13.5?
Yeah, the top of that green candle.
Nice. Almost up 5 points.
Oops. Okay, buyers are at the bottom. That's all they could do.
This is what I hope the buyers are at POC now. 95. And no. Somebody looking to buy there.
Where do we go from here? We think, whilst it could be a volatile period, that with inflationary trends continuing and abating at the margin, bond yields hover around this level, maybe move a little lower, and that isn't bad news for equities.
Dollar, it's really railing up. So the euro is losing the money because NQ not going anywhere. VIX trying to go above 200. Maybe.
But basically what this tells me is that the long end is just spinning around and that nobody can really understand where it's going to settle out, and there's actually more stability in the front end.
Yes, got the second prove it.
The longer term inflation dynamics and longer term premium, the idea of where the fiscal picture fits in to inflation and to investor.
Okay. I am $60 on ES. Minus 40 on NQ.
The issue is, and Mary Daly talked about this extensively, and others have as well, markets and people hate uncertainty. And so what we're dealing with right now is deep uncertainty, not only about near-term economic data, but the longer-term paradigm of where we're going to settle out. And as a result, you're seeing these massive swings that are definitely just contributing to the lack of certainty that you can feel underpinning a lot of investing.
I'm on 0.
Yay!
The question
Nice.
is, should I close it?
Definitely, most likely.
This is what I think in DC, because we're touching 200 now. There is 1 minute.
Yeah. I don't like that either.
But I'll hold the ES because the entry on ES was amazing.
You closing the NQ?
Not yet. I will wait 1 more minute. Because I can see
I think we can go down to 300 at least.
dollar going lower, higher, and oil going higher. Then I am happy with that. Okay, I am $50 in profit. I close it because my entry was shit.
I also closed. I'm out.
But
Alright.
ES is 150 up.
Nice. Oh, that was perfect close by me. I closed at 301.
One WMA is rejecting us.
No, we're going lower. We're going lower. I'm keeping my ES.
I took off my Nasdaq. I'm probably done on my take profit account for today. Maybe I'll throw some gamble money on PPI. Maybe. Just like NFP when I cut my runners. That was nice. Oh, that was such a good exit by me. 301. Let's go.
Me too. I'm happy with NQ because the entry was shit, but my entry on ES is 4401, so I'm holding that on break even. And I'm looking for.
I'm just. What?
And I'm looking for like 350 from this trade, which will be at 95.
From the ES?
Yeah.
I don't know. I'm deciding if I want to be done trading on my take profit account and withdraw 500 or if I should trade New York with it. That's always a hard decision for me.
Yeah, because the New York today, it will be strange.
Crazy.
It's gonna be a printer if you can catch the moves.
But it could be quite boring and not doing anything.
I guess we'll have reaction PPI, a little bit of a reaction, and then we'll chop until FOMC. That's what I think. Then FOMC will have the moves. But it's interesting that they have FOMC before CPI, don't you think? That's such a trap. You can just tell because whatever they say in FOMC, like CPI is a big thing that they look at for inflation, right? So why would they have the like FOMC before the numbers come out?
Yeah.
Yeah, that just doesn't make sense to me. So why talk about inflation until CPI numbers come out? It's just a major trap. They're gonna trap everyone for FOMC, whatever they say. I almost guarantee it.
Don't worry, they already know the numbers.
I know they know the numbers, but I'm just saying though it would make sense if they talked about the FOMC on like Thursday after CPI or Friday instead of before the actual numbers come out. I know they know the numbers, obviously, but it's weird. Wow. Re-enter short?
Actually, this is what I'm thinking.
Yeah, I might actually give it a shot at a short. 313, maybe. Don't want to risk profits, but 312.
Yeah, to be a.
Yeah, we could have 3-2 for sure. I just don't like that the 200 moving average is so close to us. That kind of sucks.
In terms of this particular gruesome attack over the weekend, we don't currently have that information. We will continue to look for it. There's a question we've all been asking.
Okay, guys, I need to go.
Okay, Koltun.
So I'm not looking for an entry. I'm just keeping my ES running.
I'll catch you later in New York. That was the entry for long if we were trending, which we're not.
Don't think so.
Right now? No, short.
Yeah.
Okay.
Which we're
Yeah,
not
I'm gonna go
because-
too. I'll see you guys in New York.